night. But it's all about that rebound, can't stay in the ditch. Gotta climb to the top, scratch that wear rate. I'm pushing up, no time for a stall. Take the dip, we're gonna catch the fall. All my gains, can't let them slip away. I'm here to crush the bets, watch me take the day. We don't fold, no, we hustle till the end. Riding waves and profits we defend. Watch it move, let the numbers talk. Green lights flash as we take the walk. Cash in the air, don't let it slip. We're chasing the highs, let the profits rip. Watch it move, let the numbers talk. Green lights flash as we take the walk. Cash in the air, don't let it slip. We're chasing the highs, let the profits rip. Talk, slip, rip, we won't quit. Talk, slip, rip, we won't quit. We got the fire, can't let it fade. Gotta keep it locked in every move we've made. I'll short that dip, sell out the pump, turn my portfolio to a gold mine dome. Pressure's building, but I'm here to ride like a rocket aiming for the fucking sky. Fingers crossed, or maybe it's fate, but I'm betting big, no time to hesitate. I'm in the rush, no looking back. Taking risks like a shot in the dark, no track. You gotta learn the balance, gotta stay on your feet. One wrong move and you're back in the street. But that's the game, we take the risk. If you're not in the play, you're already missed. Climbing up like it's do or die. I'm shooting my shot, won't ask why. Watch it move, let the numbers talk. Green lights flash as we take the walk. Cash in the air, don't let it slip. We're chasing the highs, let the profits rip. Watch it move, let the numbers talk. Green lights flash as we take the walk. Cash in the air, don't let it slip. We're chasing the highs, let the profits rip. Talk, slip, rip, we won't quit. Talk, slip, rip, we won't quit. We're on the rise, can't let it fade. Every move we make it paid. I'm going long but shorting my fears. Pushing through the doubt, wiping away the tears. I ain't afraid of the dips or the falls. When I'm in this game, I stand tall. If we lose, we'll take the hit, but I'm playing for the game, not the bit. Watch it move, let the numbers talk. Green lights flash as we take the walk. Cash in the air, don't let it slip. We're chasing the highs, let the profits rip. Watch it move, let the numbers talk. Green lights flash as we take the walk. Cash in the air, don't let it slip. We're chasing the highs, let the profits rip. Talk, slip, rip, we won't quit. Talk, slip, rip, we won't quit. On the rise, no time to waste. Turn it all into profit, a winning taste.
Oh, brother, oh, brother. Good morning, good morning, good morning. Welcome back to another episode of the Kohrs Show, where it is a beautiful Monday, April the 28th, I want to say. If I had to guess what day it is or it isn't, I believe it's the 28th, which means we are in the final portion of the month. And it's always exciting at the end of the month, start of a new month. There's a lot of money flow. You get all these major macroeconomic reports, and that's exactly what's going down this week. Not only are we looking for pretty important, pivotal, impactful, meaningful news related to what's going on in this trade war, we're also going to be in getting all these major macroeconomic events, such as inflation, the unemployment report, scattered with some other things. And don't forget, we're in earnings season. By weight, in terms of the S&P 500, 40%, 40% of the S&P 500 is reporting this week, not by the number of companies, but by obviously the market cap of said companies. And that's what happens when you have Apple and Microsoft and Meta and other just key, very large companies all reporting the same week. So we have a lot going down. And for me personally, I think that this is going to be a very, very, very exciting one because not only do we have all of these things kind of aligning together, updates related to the trade war, what is happening really in the war, like the ceasefire, Russia, Ukraine. We were literally in real time getting some news related to that. We have all these economic reports, what's going on with inflation and unemployment, basically the stability of, the U.S. economy. And then from there, all these earnings. This is that perfect situation where that's all happening, and we also have very interesting shifts in the options market. It's going from being put dominated to call dominated, depending on your time frame. We're seeing some serious strength. Farther out, there's still a little bit of trepidation, a little bit of uncertainty. Maybe, but it is lessening. And then from there, we're also seeing interesting technical setup. So depending how this goes, we might be seeing a nice trend. So I, for one, am very, very, very much hoping that we are getting out of this cycle of just pure quarter flips. High octane quarter flips where you might make or lose 5 figures, 6 figures, 7 figures, depending on how much you're betting, based on nothing related to fundamentals, the economy, technicals, risk reward, just purely headlines. If I've said this before, I've been lamenting about it for a while, but I've told you guys that what we've seen for the month of April, really since that Rose Garden event, this environment has been my least favorite time to trade in many, many years because I feel like there's truly no edge. I do. I just think it's exclusively news driven. The best we're all doing is just guessing. And all you have to do is throw on a trade, ideally be super, super protective of your downside risk, and ideally just let it rip from there. So I'm hoping that we're kind of putting an end to that chapter, starting a new one, and finally getting back to what we like doing most. Yes, of course, we enjoy being a degenerate, but we like to pair our degeneracy with a little bit of empirical, statistical reasoning of here's the flow, here's support, here's resistance, here's some basic Bayesian probabilities to take advantage of whatever the situation is, which clearly has not been around for the past, 2 to 3 to 4 weeks. So I'm hoping that this week is the start of a return to a little bit of normalcy. Now, is it going to be normal? No, but through the lens of the market, I hope we're at a point where it's just not so headline-driven. Headline-driven environments, what's the advantage? Truly, what is the advantage? Like, we have no, as active traders, you're just, unless you have that insider information, it just is what it is. So I'm hopeful. Things are, I would say right now, if it was a gauge of how it's looking versus not looking, it is looking slightly better. Is it the best picture we've ever had? Is it the best setup we've ever had? Obviously not, because there's still a lot of unknowns. There's still a little bit of chaos and uncertainty here and there. But in terms of progressive trends in the right direction, we are making that move. Nice haircut, broken ovaltine window. That's very kind of you. I appreciate that. Good morning to all of you. Who's in chat? We see Kohrs Towing, Turf Dog, WMD, Some Prodigy, Only True Americans. We have Matt. We have Tom Leaps. We have D&D. We have Trex. We have other Matt. We have AP. What's up, AP? We have Abe. We have Team. Everyone's in here this morning. You guys must have had a good weekend because you guys are up at the crack of dawn with me today. So obviously, good morning to all of you. I truly appreciate you guys getting up before the roosters are crowing, before the sun is even up. I know, like, we're just putting in that work, We're just putting in that grind. So I do appreciate you guys being here so incredibly early. And on that note, I should probably do my side of the bargain here. What's this one? Lost my card, and this morning I realized I'm not a member. Fix my bad, G. Love your content. Spilled bong water. I appreciate that. I'm sorry you lost your card. I'm happy that you found it, and I hope one of these days you're able to clean up all that spilled bong water. It seems like that's a major issue that's been plaguing you for probably months, if not years at this point. I hope it's on tile. I hope it's not on carpet, because it sounds like years of spilled bong water on said carpet could be obviously very, very problematic. So I appreciate that. I'm happy you found your card, and hopefully one of these days you're able to take care of a little bit of your issue there. That's that could actually be that could be a huge problem. Anyway, shout out, I appreciate it, and let me show you guys a little bit what's going on. So when we got up this morning and really when futures market opened up yesterday, remember the futures market opens up at 6 p.m. Eastern on Sunday night. So that's when people are like, yo, markets are up or down. They're most likely referring to them like futures market if the actual pit session isn't going yet. Anyway, we opened up a little bit red this morning over the past hour, basically on the back of some commentary from Bissett, the Treasury Secretary, CNBC interview. I do have that. We'll be listening to it. We're seeing some optimism. Not only are we pushing Friday's closing value on both the SPY and the Qs, but we're pushing the high value as well. So yes, it is a very, very real shot that we might be seeing this upside gap fill today. Remember on SPX, that is at 5572. Once again, that is 5572 if you're looking for the upside gap fill on the S&P 500. Now, if you want that equivalent on SPY, it is 554.81. We were basically talking about the low value from Wednesday, April the 2nd. And on the NASDAQ QQQs, we actually already took it out. That similar gap didn't exist. But I do want to point out that we're roughly pushing the 50-day EMA. So I'd love to see if it can push and hold. And I'm kind of looking at this structural technical breakout here we have from the high of Wednesday the 2nd. So tech, the TLDR there, it is actually outperforming on a relative basis. But that makes sense because in the past week and a half, the strong sector, as we've been seeing from all those market update videos within that heat map of the S&P 500, it's actually the semiconductors. So semiconductors plus Palantir plus Netflix. That's been the world that's been looking really good. All semis. So I'm talking about Broadcom, Micron, Intel, Qualcomm, NVIDIA, AMD, SMH. SMH is the ETF tracking that semiconductor world. That's been looking really good. And once again, that is a tradable thing, SMH. If you want to trade it leverage, you could look at something like Soxel. So that plus Palantir. Palantir's been crushing. You've also had Netflix absolutely crushing. You've also had MicroStrategy absolutely crushing. And then you've had Tesla recently start crushing. So I'm showing you that just to kind of show you why it's like tech that's clearly leading the way. In fact, sometimes last week we were seeing actually like financials falter a little bit. Not long ago, United Healthcare, the biggest health insurance group within the U.S., they had really bad earnings. They got clocked. So it is the tech sector. So if you're looking for something to be bullish on, will that continue? I have no idea, but that is the current trend. So that's just a little snapshot of what's going on. Stock futures are slightly negative as investors brace for a busy earnings week. Well, I bet if I reload that, they're going to give us, the intern probably had to change it. Stock futures are little changed as traders wait big tech earnings. Like I said, the earnings going down this way based by market cap weight. 40% of the S&P 500 is reporting this week. Here's a look at, this is a nice graphic from @eWhispers. Feel free to screenshot it. It is in the newsletter. You can follow this account on Twitter, but we're getting some big ones. SoFi, PayPal, UBS, JetBlue, Coca-Cola, Pfizer, Visa, Snapchat, Starbucks, Microsoft, Meta, Caterpillar, Robinhood, Qualcomm, Eli Lilly, Roblox, McDonald's, MasterCard, CVS, Amazon, Apple, Riot, Airbnb, Reddit, Fubo, Exxon, Chevron. It just goes on and on and on. Obviously, I would argue that the Wednesday close and the Thursday close are the most important ones. Microsoft, Meta, that's going to be a big 1-2 combo. And then on Thursday, you have the dangerous combo of Amazon and Apple. So in terms of what we've been talking about over the past couple of weeks, it's been a lot more overall market focused. It feels like this week the conversation is going to be a lot more individual equity and how the equities either do or don't perform, and then how they're going to be impacting the overall market. So that's just another little thing that I've been noticing where it does feel like we're kind of pivoting back to what I've been referring to as normalcy. So obviously major important things to pay attention to. So I'm watching those throughout the week, but then more specifically bringing it back to today. I'm going to give you these key levels in a second. But if you're just joining in right now, or if you're busy at work, or if you need to tell your manager to shut up or something, I would say the key thing to be watching for today, just the very quick TLDR, is I would argue as of right now in the short term, the bulls are currently in control. From an option structure standpoint and from a price momentum standpoint, clearly the bulls are in the driver's seat on a 0 DTE basis. Granted, the market's not open yet, but that's what we're seeing in pre-market trading, which is making me optimistic about this upside gap fill to 5572. So if you don't have the time to listen to the entire market breakdown or watch my DGen trades of the day, that is my major call out of the day. We pushed and broke the top side of this high from Wednesday, April the 9th. That's the day that Trump had that announcement that caused the historic gain. We pushed it, we closed above it. We successfully held it, and now we're just setting up for not only a test of the 50 EMA, but also this upside gap fill. That is like the major TLDR of the day. And then for those of you who want a little bit more of the nitty gritty details, I do have some other things that I want to talk about with all of you. And I would say the first thing is, as of, I believe it is tomorrow, and please in chat, correct me if I'm wrong, but I believe tomorrow is Trump's 100th day in office. And then for those of you who pay attention more specifically to U.S. politics, you know, like when a president, they always have their 100-day plan. Like that's a common campaign trail, I guess, discussion, speech is what they're asked about. What are you doing in the first 100 days? And we're about to be there. Welcome to the Thunderdome. Inside 100 dizzying days of Trump, the administration's breakneck speed is both one of its most effective tools and the most glaring vulnerabilities. So as of tomorrow, and I'm pretty sure tomorrow, like I said, if I'm wrong, please, it's either today, tomorrow, the next day. I'm pretty confident that it is tomorrow. When this all happens, of course, we're seeing a lot. We're in the middle of a trade war. There's global conflict. We have a lot of immigration stuff going on. The administration, once again, from the Secretary of Defense, Hegseth, this is the second time that he's in issues with some signal chat stuff. There's a lot. I mean, we have judges fighting. Like, there's a ton going on. And when all that happens, when there's a lack of stability on various fronts, generally that means that the polling is not going to be so solid. Trump's approval rating falls as he nears 100 days in office. What I always think is interesting is when I poll you guys in here, people who are actively interested in trading, and more specifically active trading, it does seem that you guys have a clear difference than the normal national polls. Whenever I ask you guys anything, it is interesting of how much a group of traders and people specifically focusing on the markets, you guys really are a distinct group. I feel as if I were to poll you guys right now, it'd be very, very different than what we're seeing from these quote unquote normal national polls. So it does just show, at least in my mind, it kind of highlights and showcases the differential between, I guess, just life interest. And when you guys obviously actively trading, paying attention to the markets, and I'm sure you guys are all completely filled with other political opinions for good reason. I hope you're informed. I hope you do a little bit of research rather than just looking at headlines, but whatever, that's a side point. It is always interesting to me of how active traders are really their own distinct group when it comes to all these political opinions. But anyway, just wanted to share that because most likely for today and tomorrow, this is going to be dominating the news cycle of what is going on in the 100 days and that type of stuff. Rubio says that the coming week is very critical in the Russia-Ukraine war negotiations. Obviously, if this can happen, if we see these tensions completely just like chill off, simmer down, that would be a massive, massive win, not only for just someone on this planet, all the citizens and soldiers in the area of Russia and Ukraine, but it'd be a big, big win for the Trump administration. According to Rubio, we're getting closer. I'm sure you guys saw that somewhat famous now picture of Zelensky and Trump. Were they at the Vatican? I forget where they specifically were, but they were there for the funeral of the late Pope. It seems like something's happening, but the most recent commentary, as in last night, early this morning, it sounds as if Trump's getting a little bit displeased with how Russia is coming to the negotiation table. Kind of some commentary referring to like, do they actually really want this, or like kind of what's going on? So that's something to pay attention to. It's a very important narrative, but that's also, it's not just going to be today. Obviously, it's going to be ongoing. So more specifically, let me do my job and prep you guys up for today. Bassett was on a CNBC interview this morning, and this is very important because not only is he the Treasury Secretary, but he seems to be the major architect of what's going on in this trade war. He seems to be the guy that has the understanding of global trade, of currencies, of interest rates, of leverage. Like, this is a guy who, prior to this position, was a very, very serious player within Wall Street. So when he talks, a lot of the market is starting to pay attention to what he has to say. And as I alluded to, do I still have this up? Yes, he was on CNBC this morning.
Negotiations with China. Treasury Secretary Scott Bessent is with us, and it's good to see you.
Bessent or Bessent?
The Secretary.
Uh-oh.
Like any I've ever seen.
They cut us off. All right, I'm going to have here.
Go against,
CNBC, they kneecapped us early this morning. Hang on. We don't need Kramer right now unless you guys just want to know what to do the exact opposite of. The major thing here I could do to probably track this down is Squawk Box. Did they cut the major points? Because if not, I found some of the key things that he said. They really did not cut that already. How could Squawk Box not cut it this early? I found it when it was live and I listened to the whole thing. So one quick thing you guys could do here, if you ever miss anything important, come to Financial Juice and they're generically going to give you the most important rundown. But we also had the press secretary speaking live this morning. So there's already a lot going on. And honestly, that's kind of what's causing this market to pop over roughly the past hour. But anyway, a little pro tip here, come to Financial Juice. Is it the absolute fastest? Are you going to be getting news as quick as Bloomberg Terminal? No, probably not. But as a trader who's not really focusing on high frequency trading, this is a pretty good source. And as you could see, the Treasury Secretary was saying a lot. And the major things I want to pull out to you, one relates to China, and then the other relates to what he was saying at that closed door meeting at JP Morgan. So anyway, this was about an hour ago. Once again, early this morning, all aspects of the government are in contact with China. This one's important because remember, this is the whole he said, she said. The U.S. is continually taking this narrative that we are talking with China day in and day out. We are making progress. While China is taking their narrative of we are not talking at all, and neither one is really stopping with their rhetoric, which obviously they both can't be true. One of them is telling the truth, and one of them, well, we're not calling them a truther. I don't know who it is, but this is just how it's being pitched. China is saying we're not talking. The U.S., like both sides at this point, have nearly quadrupled down on this. It is up to China to de-escalate on tariffs. I would argue that they already have. Some of the big news of last week is that they're considering lowering some of the retaliatory tariffs the same way that the U.S. is. We're in this awkward in-between where both sides are trying to extend an olive branch, but they're not trying to admit that they're extending an olive branch. But if I were to more so read into it, and remember, I'm not a political mind or anything like that, it does seem like they know in a certain way that this is not really mutual destruction, but it's kind of mutual pain for each other. So let's just calm the tensions down. A little bit on ECB, don't really care that much about it, blah, blah, blah. It's a complicated relationship. We know that with China. This is what the secondary thing that I thought was interesting. I didn't say anything new at the JP Morgan meeting. This happened mid last week. It was a closed door meeting, not open to the public, not open to media. It was positive commentary from the Treasury Secretary, who is now kind of backpedaling, saying, I didn't say anything new, and the market legit rallied on it, and he was arguably surprised. I'm surprised when the market rallied after remarks at the JP Morgan conference. I didn't say anything new. Well, apparently you said something important enough that the market actually started to pump, and since then we're even higher. It wasn't just a one-day thing. It's led to this moment where as of right now, we're opening up at an additional breakout high. So clearly the market liked it. Very, very much liked it. U.S. Treasury Secretary Bessent says he is surprised that the market rallied after his comments about de-escalation with China at the JP Morgan conference last week. So he's arguing he didn't say anything new. I think the rest of us are saying, man, we wish we were at that meeting. On top of all that, as I said in the update video yesterday, shout out to all those of you who watched it. I truly, truly appreciate it. There's almost 200 other countries involved in this. It's not just the U.S. and China. Remember, we have very important trade negotiations with Vietnam, with Japan. Recently, we had some with Argentina, with Israel, important ones with India. The list goes on and on. But this morning, why there's a bit of optimism, if I really had to point it out, it would be because of this. Not only is the Treasury Secretary saying things that we're expecting, no warning messages really with China that we haven't heard before. We're also getting these updates. Negotiation with Asian trading partners are going very well. Substantial talks with Japan allies. That's a very important one because remember, they own a large part of our foreign debt, as in they own a lot of U.S. Treasury. So that's a very important one that's going well. And then back to China, Chinese exemptions showed that they want to de-escalate on trade. Okay, so we are anxious not to escalate with China. So we're basically being told everything we know, but it's being confirmed, which I would argue is important because the cycle that we've been in is something is said and seemingly that day, potentially within an hour, is completely reverted. And they're like, this time around, Not only do we have the third weekend in a row where you're told from the Treasury Secretary, it's Sunday, 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 third Sunday in a row where we're told things are going well. But what's nice about it this time is it's not being counteracted by some other important speaking person, point, whatever, the administration. If anything, we're starting to see a little bit more of a unified front of like, yes, we are making progress. Yes, we are making progress. Yes, we are making progress. And the fact that it is being double, triple, quadruple down, that's the way we are going. Obviously, the market is clearly reacting favorably to it. And I mean, I could just show you right here. Look at the SPY. We're kind of getting that breakout from the close on Friday post-market, but nice trend up. Bitcoin holding 95,000, vol coming down. This is exactly what you want to see if you're on the bullish side of things. If you're on the bearish side of things, my question to you would be, what in the world are you doing? Looking at more of the medium time frame, the 30-minute and the 4-hour, both of these are trending on the top side of their EMAs. This fancy schmancy looking cloud, it's just EMA lines. There's nothing really special to it. It's just a quick visual tool to say, oh, are we on the bullish, as in the top side of things, or bearish, the bottom side of things? Looking at the 5, the 10, the 30, the 4-hour, and the 5, the 10, the 30, and the 4-hour on the S&P 500, the NASDAQ 100, and you could even double check it on something like Bitcoin. They're all favoring the bull side. So right now, if you have a bearish position, my question is like, what are you looking at? What are you seeing that makes you want to do that? So that's some of the major news. Just to get you guys further prepared for the entirety of the week, I do want to remind you that all of April historically is a bullish month, but then May is a choppy one. Since this is our transitional week right now where we're going from one month to the next, I do want to remind you that historically April is a very, very bullish month, and then May, it has a very mixed track record. In the end, it nets out to be neutral. We're kind of flat, we drop, we're kind of flat, then we pop. But if you look at the individual performance, some Mays are nicely bullish. Some of them are kind of pretty bad bearish. Other ones are complete chop fest. So we are leaving historically the stats of a pretty trendy, nice bullish month. And we are about to enter actually a 2-month period of some chop. And then the next time we have a nice trendy month is actually by the time we get to the month of July. Now, just because historically it's been choppy and messed up, does that mean how it's going to be this time around? No, I'm just kind of letting you know the historic seasonality. If anything, this time around, it's going to be much more related to the trade war, the actual war, and then also just these major macroeconomic developments. On today's slate, we really don't have much scheduled for Monday, May the 28th. Obviously, we have some earnings, but really the party gets going tomorrow, where we get the JOLT job openings, consumer confidence. We get GDP and more job numbers on Wednesday on top of inflation. On Thursday, you're going to get the normal initial jobless claims. And then the real party's Friday, the first Friday of a new calendar month, you're going to be getting the unemployment report. So I would say a couple days this week, you want to be paying attention early, namely Wednesday and Friday, about an hour before the market opens. Even here, we're going to probably have to stream early because those are going to be some very important pivotal events. So highly, highly, highly recommend you pay attention to those. Feel free to use this tool, investing.com. You could go to whatever your favorite source is, but they're all going to have these listed. Also, please don't forget, as I referred to before, 40% based on market cap. 40% of the S&P 500 is reporting this week. That's what happens in the same week where you have Microsoft, Meta, Amazon, and Apple all reporting in the same week. So this is very, very impactful. Feel free to screenshot it. Feel free to go to @eWhispers. It's also in the newsletter. Do whatever you need to. And another handy tool that you could use is right here. If you do have Spot Gamma, let me move myself up here so you can see it. On Spot Gamma, when you come to the market overview page, you can look at earnings right here. It's going to be the second tab. And then based on the day, you're going to be able to kind of do a little bit of a breakdown. And what's really cool about it is it's going to be giving you those expected moves. So MicroStrategy expected to move 6%, Amazon 5.8, Apple 4.5, Riot 9%, Moderna 9.5. It's based on the options market. You could see the at the money straddles that roughly gives you an idea of what the implied move is going to be. They do a little bit more computation on top of it, a little bit more refined. But regardless, if you are a Spot Gamma member, this is a very, very, very useful tool, especially if you decide to play earnings. Now, when we're in these types of environments, one of the most common questions I get is like, oh, am I bullish? Am I bearish? I need to remind you that when you are playing earnings, you have a 50-50 shot. Not only do you not know if it's going to beat or miss, but then you have to look at, how it beats or misses based on Wall Street expectations. Because remember, something in a vacuum could have a really bad report, but if Wall Street expected something worse, it can actually go up. And the reason I'm bringing that up is because that's what we just saw with Tesla. Tesla had very bad numbers. Wall Street expected something slightly worse than really bad. It was just bad. So then Tesla not only went up that day, but we're seeing a continuation higher and higher and higher. So when it comes to these, I truly don't like playing earnings. There's been many research articles on this. The best way you could really play earnings is most likely playing vol of earnings rather than the bullish or bearish direction, more so of a selling premium type of event. I'm not telling you to specifically sell calls or puts, obviously, based on whatever your particular bias is or whatever you're seeing in the option structure at that moment in time. There might be a better or a worse play, but generally the people who are continually profitable by playing earnings, they're not directional players. They're more so of playing the vol crush, which is very important and a very, I guess, distinct difference from having a generic bullish or bearish opinion. 99% of the time, if you're going to ask me about earnings, the major play is to play the vol crush. It's not to play the direction of the earnings. So just wanted to share that thought process because we are an important week, and also share this little tool update that you have there from Spot Gamma. All right, let me get myself back down. Don't forget to sign up for the newsletter. It's free, macros.locals.com. This newsletter comes to your email inbox every single Sunday. Breaks down the previous week, what to look forward to in the upcoming week, all of the earnings. I kind of highlight the ones I think you're going to care about most, all the major macroeconomic events, and then I give you the seasonality for each individual day. Historically, this day has been slightly bullish. Is it the most bullish day we've ever seen from a seasonality standpoint? No, it's clearly not, but it is a bullish day. Tuesday, a bit more neutral. Wednesday, a bit more bearish. Thursday, a bit more bullish, and then Friday, a bit more neutral. So yes, more of a choppy week, if you will. And then last but not least, these are my key areas of the day, which is a perfect time to get to it because right as the market opens, I'll be better to explain what I am seeing in the market. You know what we'll look at today? We'll start with Tesla and we'll start with MicroStrategy just because both have been doing really well. Dingity ding ding ding. The world's largest casino is now open. Play responsibly, and if not, have fun. Don't forget, easy come, easy go. You can't take it with you when you die anyway, so let's see what the market gods have in store for us today. As I explained to you guys last week, here, let me switch this up so you can see what I'm doing. I have not traded yet today. I have my 20 Apex accounts. I have my 5 take profit accounts. Is it properly set up? They are not properly set up for whatever reason. Hang on. Why? Oh, I'm disconnected. My data feed's disconnected. Disconnect, reconnect. You got to try the old unplug it and plug it back in tactic. Is it working? Potentially not. All right, we are there. All right, I'm now just reconnected. For some reason, my data feed was lost. But as you can see, I believe today is day 3 of trading these accounts. So I have 20 Apex, 5 take profit. They all started at 50K. They're now at 56. So I'm up 6K, which is about 150,000. 6,000 times 25. Yeah, that's $150,000. Not too shabby for 2 days worth of trading. But remember, this is all fake money until it becomes real. And it's kind of weird. It's like Schrodinger's money. It's real until it's not. Well, it's fake until it's not fake. So basically, on paper, I'm up a decent amount. Unfortunately, I can't access that money quite yet because I have to jump through a bunch of other hoops and basically not blow out the account. So we're in this weird situation where it's fake money and we're trending in the right direction, but I just need to do a couple extra things for it to turn it from fake money to real money and to be able to actually get some of that into my personal banking account. So we're gonna trade those today. As I explained to you guys last week, I'm really attempting to do my best to be a bit more disciplined and then just wait for those perfect setups. So on that particular note, I'll probably be waiting till past 10 a.m. today. If I'm trading well, I'll definitely be waiting till past 10 a.m. to execute anything. And more important than the 10 a.m. is more so of just actually making sure everything's in alignment. So at market open, 5-minute, 10-minute, 30-minute, 4-hour, all bullish on both the ES and on NQ. So yes, the overall market and the tech sector, right now, the bulls are in control. And then we also can have a look here. Let me go to the 5 seconds so you can see the options flow out of the gate. It's pretty flat on the S&P 500, and then looking at the Mag 7, which is not up. Hey, do I need to reload this? Just give it the old reload right here. Come on, Mag 7. Flat and actually starting to sell off starting at about a minute and a half into the day. So I'm going to wait and see what kind of trend either is or isn't being created. I don't necessarily want to be taking a day trade long position if I see the options market getting hit like this. So just going to wait, not going to rush it, not going to attempt not to do anything crazy. And then maybe Lady Luck will be on my side today. But yeah, we're not seeing that optimism that I would necessarily love out of the gate. Yeah, price popped a little bit, but as you can see here, the options market has, it's definitely leaving a little bit to be desired. Regardless, we are going to be patient, wait to see how things play out. I can see above my head over here, it's a little bit of a mixed bag. I'm seeing some green, I'm seeing some red. So let's just wait. Let's just wait to see what kind of trend either is or is not being created today, which is the perfect time to give a very special shout out to Public. Today, the stream partner is Public. Folks, if you're an options trader or an inspiring options trader, I believe there is no argument of why you would not be on Public. It is the only brokerage I know of on God's green earth that you get paid a rebate every single contract you trade. It doesn't matter if it's call or put, doesn't matter if you're buying or selling. Every single time you trade an options contract, you will be earning a rebate. On top of that, it is free to download, it is free to sign up, there are no commission fees, and there are no per contract fees. If you want to trade equities, yes, they do not engage in payment for order flow. Yes, they have crypto trading, they have bond trading, they have high yield accounts, they have retirement accounts. This is a one-stop shop for what you need, but more so specific to my option traders in the audience right now. There's a reason why this is my main preferred options platform, because no matter how I'm trading, if I'm trading well, I get more money because of the rebate. If I'm not trading well, at least it's less painful because I'm still earning the rebate. So like I said, if you're an option trader or an aspiring option trader, this is what you need to be checking out. Pinned to the top of chat in the description of the video. Make sure you use that link because you're going to start out at a higher rebate tier. There's a tier system based on like basically the more you trade, you're going to get more of a rebate every single time you trade. To start off at a higher tier, you're going to want to use that link pinned to the top of chat. And I should also note that they actually just had a pretty big announcement. Check this out. This came out, I believe, on Friday. Public is now the official U.S. investment platform for Aston Martin. So for those of you who are F1 fans, I definitely am a massive F1 fan. A shout out to Drive to Survive. To celebrate, they are giving you and a friend a chance to win an exclusive VIP trackside experience in Las Vegas. So if you're an F1 fan, if you're a racing fan, if you're an Aston Martin fan, if you're using Public, check this out because there's like a little bit of a scavenger hunt that they're doing within the platform that you and a friend might be able to win a VIP experience to the Vegas Grand Prix. So just want to give a little specialty shout out there. And then also clearly, if you're just a fan of it, like that's sick. What a cool partnership. So just wanted to call that out. Like I said, I retweeted it. If you're having a tough time finding that particular tweet, I retweeted it from my account. So you should be able to find it a little bit easier. I try to enter and maybe I'll be able to win. So that would be pretty freaking cool. All right. How are things actually shaping up this morning? Looks like we got a little bit of a pop, a little bit of a drop. We have the SPY seemingly almost getting its downside gap fill. Once again, this is the high that we saw on Friday's trading session. And then actually tech taking a little bit of a larger hit here. We had about 4 minutes and we saw that in the options market of the Mag 7 just kind of getting a little bit smoked right here. Someone trying to pop it at 934. Flat, hit, big pop. Now we're flat. The question is, are we going to make this bottom here or not? So the SPY trying to hold the high from Friday while the Qs did not hold that, and in fact, they didn't even hold the closing value. As of right now, the SPY's in the green while the Qs are slightly in the red, and I got some sort of daily alert on Tesla. What did I get a daily? Oh, we got a breakout daily alert on Tesla taking out this high. That's a nice structural breakout. The question is, will it actually hold? Obviously, you could say it's pretty much been range bound ever since the start of March. We've had the same highs, we've had the same lows. We're knocking on the door. It's time to find out if anyone is home, but that is actually a really nice breakout. MSTR continuing on its trip higher, Palantir continuing on its trip higher, Nvidia continuing with a bit of consolidation, Coinbase trying to trend higher. You have Meta trying to recover, potential double bottom. Remember, they have that FTC suit. Broadcom trying to hold its breakout. Microsoft reporting this week, trying to hold its breakout. ASML not doing a whole heck of a lot. In Netflix taking a bit of a breather after tagging a new all-time high. Rum trying to hold $8. Apple reporting this week, once again trending up to this breakout line. Amazon also reporting right at its breakout. You're going to see a lot of these major equities are right on that precipice of a pretty important move, while other ones have actually not only had the breakout, but they're actually, as of now, kind of like successfully holding it. So what I would love to see today is actually if this can all hold, but for that to happen, we're going to need I don't know what we're seeing in the Mag 7, but the market is not a fan right now. The SPY potentially bottoming here at 937, trying to pick up. We held flat, got hit, slid. Looks like we're getting a bit of a bottoming formation once again, 7 minutes into the day, and now we're seeing some optimism. More specifically, we're seeing calls start to pick up. So this entire time, puts have been flat. No one's really been touching puts today, which is telling me still that this is a bull-dominated structure. But anyway, these blue lines are the puts. It's the zero DTE puts are the light blue. All expirations put together are the dark blue. As you can see, no one's touching puts. Out of the gate today, we had people selling their calls, the call delta dropping. And then at 937, it seemed to pivot, and we're seeing a little bit more optimism. And this call delta is now picking up. And actually, so is the put delta. So as these things both trend up, that's bullish. As these things trend down, that's bearish. Looking at the Mag 7, we're being told a slightly different story. The puts were trending down. The calls were trending down. Something crazy happened at 934. We got to figure out which one that was. That's a big move in the market. Was it Apple? It was not Apple. Was it Microsoft? It was Microsoft. Someone smashing these calls long right here. Huge jump in the Microsoft calls longer dated. It's interesting. Definitely an interesting thing to happen, especially with earnings this week. So does that player know something we don't know? Maybe. I don't know. Your guess is as good as mine. All I can do is tell you quantifiably someone is opening a pretty freaking bullish position on Microsoft. So we then have, I'll just double check. Was it Meta? Nope. Meta's actually getting hit. Amazon, they have earnings. Nope. Nothing really there. Tesla, nothing really too crazy. MSTR, we're seeing some calls come in. Palantir, nope, nothing really there. Meta, Netflix, let's check that one out. Nothing too exciting. And then Google, what do we have going on in Google? Nothing really there. So the standout in terms of the major tech plays right here is this big pop. You can see the volume spike. You can see the delta impact. We had this call delta really pop. So that was exactly what we saw right here. And you could see its overall impact on the Mag 7, this giant pop right there. That was because of those trades that we saw coming across once again on MSFT. MSFT getting that nice call pop. And the Mag 7 as of right now kind of maybe attempting to double bottom on its delta reading. The price is improving a little bit. The S&P 500 is looking quite a bit more constructive. Flat, sold off, based a little bit of a overshoot on the delta, and now we're actually almost back out a new delta high. So as of right now, there's a clear mismatch. The S&P 500 looking quite a bit stronger than the Mag 7. So let's see which one's right. Let's see which one's wrong. It's just going to take a little bit of patience. But the SPY almost back at its intraday high. And honestly, even right now, if the Q's recovered from its red to green move, it's actually pushing the high from Friday. It looks like the SPY is the one about to win out and drag the NASDAQ higher with it. And who knows, maybe it was that trader going long on Microsoft that was really able to kind of kickstart the bullish action of the day. But whatever it was right before 9:35. We weren't even 5 minutes into the day, and Microsoft got that big trade. That was a lot of calls. Matt, when you post your trades, can you use here, since many people in the Discord, it would send push notifications to phones? What you can do, there's an easy workaround. All you have to do is turn on your notifications for that channel. For all those of you in the trading Discord, if you're using Discord in general, you can change your notification settings for each individual channel. So if you want it for my swing channel, but not my day trade channel, if you want it for Piper, but not the other, whatever it is, per channel, you can actually change those notifications. So if you want a push notification for an individual channel, that's actually in the settings. So you can do that without the here or the everybody or stuff like that. So if you find one channel be useful, but really don't care about the information in a different channel, once again, each channel has its own individual settings that you can change on your side of it. Which I actually think is a really nice aspect of what in the world is going on. All right, these are my key levels of the day of the S&P 500. The green, the red, and the white horizontal lines are the previous trading session's high, low, and close. So once again, the green, the red, and the white. The dashed green, the dashed white, and the dashed red are the high, the low, and the close of 2 sessions ago. I like to pay attention to both. The next thing you're going to see is this white block. Technically, there's 2 today. That's the transition zone of both the gamma and the delta on the 0 DTE and also for the remainder of the week. As you can see for today, they're embedded within each other. So I would say above this, we're looking for bullish opportunities. Below it, we're looking for bearish opportunities. So this white block is a transition zone. The yellow/golden lines are key open interest levels. That's where we're seeing quite a bit of action in like the actual options chain. And then right here, we have this blue, which is the upside gap fill. So we have an upside gap fill. We have highs, lows, closes. We have transition zones, and then we have key open interest levels. And what I like to do, my mental framework of the market is more so of I want to see how the market reacts to these levels. And then when we're in between them, I say we're more in like no man's land of like, I just wait for like, okay, we are holding this level. Great. Can we push to this next level? When we get there, are we going to hold or are we going to get rejected? If we do hold, okay, great. I'm looking for the upside gap fill. If we get rejected, okay, great. Maybe we have this downside gap fill to once again, the high from Friday. So there's an upside gap fill in play. There's a downside gap fill. And when we are in between these zones, I kind of just wait for one of the zones to be tested. And then from that test, I look for either the successful or the failure, the breakout or the breakdown, the fake out, breakout, the fake out, breakdown, the acceptance of the market or the rejection of the market. So for me, when we're on the in-between zones, I literally generally like throughout the day, just have alerts set up at the key zones. And then I just wait for those key zones to actually like play. But for right now, not only can you see it on the daily chart with the breakout, I mean, no matter how you slice it, as an active trader, if you're a day trader, swing trader, scalp trader, something like that, the bulls are in control. From a daily standpoint, we have higher highs, higher lows. In fact, 1, 2, 3, 4. We are working on our 5th green day in a row. Once again, higher highs, higher lows. Looking at the shorter time frames, the 5, the 10, the 30, the 4 hour, all bullish. 5, 10, 30, 4 hour, all bullish. Looking at the options flow, did the Mag 7 ever return? Not really. It's trying to pop, but we're not seeing it take out that delta high. But what is impressive is the S&P 500 is in fact making a new delta high. So I do admit the Mag 7 could be looking a little bit better, but it's seemingly on its way. So let's just give it a little bit of time. Granted, we're only 15 minutes into the trading day right now. The SPY hit a new intraday high. The Qs hit a new intraday high. Tesla's looking great. MicroStrategy is not doing the most today. Palantir's turning it back around. Meta's trying to turn it back around. Broadcom's going. How's NVIDIA? NVIDIA, not much. So Tesla's looking good. Broadcom's looking good. Palantir's looking nice. Meta, that's a nice recovery on Meta. Tesla's up the most on my watch list, followed by actually Meta. So Tesla, I wouldn't be surprised if we are looking to test that key technical and psychological level of 300. That is definitely my next watch there. And actually, what's my level after that? So we broke this. I'm looking at 300, and then from 300, I'll be looking at 304. So I like this technical breakout. Then I'm looking for the key psychological test, and then I'm looking for the next technical breakout at 304. Those are the levels I'm watching. Maybe you agree with it. Maybe you see it that way. Maybe you see it differently, but that's how I'm seeing TSLA play out right now. Coming back to this, we're stalling out a little bit. Not so surprising. We are at somewhat of a key level of 5,550. There is more action at 5,555. And the reason I say that is because early this morning, I saw people playing 5560 and 5550, which is why I cut it in half. So it's more of this 10-point region that might be a little bit sticky. And actually, in terms of stickiness, let's switch this over to see what the GEX is telling us. Yeah, so we're getting it actually 5590 might be the most sticky of the day on a 0 DTE perspective. That's quite a bit. The most positive gamma right now is 5590. We also have a decent chunk at 5575. So I'll be watching those two, but this is kind of setting up for not only that upside gap fill. Obviously, both of these would mean we get the upside gap fill. Remember, that's at 5572 on SPX. But by the time we get past it, not only will that be natural technical resistance, but from there, we're actually going to be seeing resistance from market makers because because of these positive gamma nodes. So please mark those out on your chart, 5590 and 5575. Those seemingly, as of right now, seem like they are very much going to be coming into play today. But anyway, we are hitting my next bull target, obviously, on this breakout. Bull target number 1, bull target number 2, and then my reach target of the day is 5,600. But based on how things are shaping up right now, it seems like we are going to be having quite a bit of a battle at 5590. So actually, if anything, I might have to lower this by about 10 points because the current trading we're seeing on the day is telling me that this level is becoming a bit more important. So once again, we're almost at bull target number 1. Bull target number 2 would be the upside gap fill, and then the reach target is 5590. As of right now, I do have a swing position. Obviously, everyone in the Discord knows what my swing position is. It is bullish bias, so maybe I should check in on that to see how things are playing out. I haven't done any trades yet today, but not a bad day. Okay, the Qs, I'm up 66% on the NASDAQ. I am up 41% on the S&P 500. I'm up 31% on Tesla, and I am down 1.5% on Broadcom. So 20K, 13K, 5K, and down 200. So that is netting out to be about $25,000, almost $30,000 in unrealized positions at the moment. Definitely not going to be complaining about that. All right. This is setting up in a situation where I wouldn't mind a little bit of a pullback here, just something that maybe I can get on the train. So I wouldn't mind a bit of a pullback, making a higher low that I could execute a long trade and then just ride this and ideally lock in a decent amount of change on the futures market. That would actually be real nice. Real nice. So let's just wait. Let's see. The Mag 7 Delta flow did dramatically improve. The S&P 500 pumped until about 947, taking a bit of a pullback right now. What is it? Is it profit taking? A little bit of profit taking, but also the put delta is dropping. So it looks like some new puts, some bears are entering the market at this resistance. Makes sense. That's exactly why we call out these key levels, because that's where we're expecting the market to react. So, whoa, what in tarnation was that? Is there any news there? What was that? Someone just smashed it. What in the world? Well, I have never. Whoa there, Tonto. What the fuck was that? Was there any news? Someone just smashed some puts on the S&P 500 and on the Mag 7. I'm not seeing any news as of this exact second. It could just be a large trade, but I mean, that's actually the biggest volume spike we've seen of the day. And someone, look at that put delta, just dumped. The call delta dumped on the Mag 7. Same thing on the S&P. Look at that put delta. It's getting hit. What's going on? What in the world is happening right now? Is this news related, or is it just straight up unmitigated trading? Does anyone have any vision on this? Does anyone have any vision? Because if this is just trading, this actually might be that perfect long opportunity of the day. If this is just literally, if it's just this, if it's exclusively some craziness in the options market and not like a news event, any recovery from here, this might be a low risk opportunity to take a stab at it. I have to admit, seeing this right now, it does make me very, very happy that I try to represent a bit of patience and be like, you know what, I'm going to wait until the market really opens, because I feel like over the past 2 weeks, there's been some really brutal fake outs between like 940 and 1010. And I feel like old Matt would have tried to go long somewhere in here, and I would have just been decimated, absolutely decimated. So I have to admit, I am very, very, very happy I had some patience. Wait, what is this one? I'm checking True Social just to see. Join me tomorrow, April 29th in Warren, Michigan at 6 p.m. So I don't think that was on the president's True Social account. I don't see that. Good luck to the great people of Canada. Elect a man who has the strength and wisdom to cut your taxes in half, increase your military power for free to the highest level in the world. Okay, so they're talking. Okay, so I'm not seeing anything major. I'm not seeing anything major from Trump, at least on True Social. And I feel like if this were news driven here, it would be coming across. I'll just double check all my news sources just to make sure. the ECB doesn't plan to change much on the tools available. I expect this inflationary process to continue. Once again, this is from the European Central Bank, so nothing really major there. What about Walter Bloomberg? Let's see what's going on this guy right here. That's 22 minutes ago. That's 19 minutes ago. That's 23 minutes ago. What about BRICS? I'm just going through a couple news sources, but it doesn't look like news was driving this. Pakistan says military incursion by India is imminent. All right, well, that's not so good if India and Pakistan are going at it. We might be getting rid of one war between Russia and Ukraine, and then these guys might be starting another one on us, so that wouldn't be so ideal. China says President Xi Jinping did not call President Trump as he claimed. That was 4 hours ago, so that's not impacting it. Let me check a couple extra. I don't think that this was news-driven, though. Standard Chartered Bank predicts Bitcoin to reach an all-time high in the second quarter. Treasury Secretary Besant says India might be one of the first trade deals we will sign. Michael Saylor's strategy buys 15,000 Bitcoin worth $1.4 billion. China denies President Xi Jinping called President Trump as he claimed. Okay, so that's once again the he said, she said. Are we back to the flow here? Let's go. So the SPY on that dump right here at 949, hitting the lowest delta of the day and not quite recovering yet. Same thing on the Mag 7. Someone hit the market pretty hard roughly 20 minutes into the day. And we have yet to recover. I have to admit, I am so incredibly happy that I just waited and I chilled before getting destroyed on whatever the hell that is. So patience. This is like always, the market pays people who are patient, waiting for that perfect opportunity. But I would argue that that is more true than ever. I'm ideally looking for this, that trade that sent the market down, for the market to be like, nope, we don't agree. And I'm looking for us to push all the way back up. But it is interesting that it came right after hitting this key level. These levels, for those of you who were here before the market opened, this was called out way beforehand. If you're in the Discord, you know it was called out way beforehand. I put this up at 8:30 this morning, an hour before the market opened. You don't have to be a rocket surgeon to understand how to get these levels. You just have to know how to read the option chain. So day in and day out, you read the technical levels with the previous high-low close. You look at gap fills, and then you also look at key options levels. And by the time you put those three things together, once again, the previous high-low close, gap fills, and then on top of that, you overlay it with the key option levels. At that point, you're going to be pretty freaking good at knowing the key levels of the day. So no surprise here that it did happen a minute after, but we ran right up to it. And then the market said, nope. And guess what? We are sending it potentially right back down to the intraday low and also the previous session's high and close. In reality, in terms of this concept of cleaning up the chart, I really wouldn't mind at all if we come down and hit the previous high, just so there's no gap on the daily chart. I really wouldn't mind if we hit 5528, maybe even hit 5525 to hit the previous closing value. I would love to find some support right there and then bounce off of that. That would actually be a really, really nice play because not only are you doing it with low risk, if it just keeps going, cut it as quickly as you can, but on top of it, it cleans up the daily chart. As in, we don't have to be so hyper fixated on the downside gap fill if it just hits it today. So I really wouldn't mind if this push right here, we hit the high, we hit the close somewhere right in this zone, and then just bounce out and then maybe kind of do something like this where we bounce out of, I would love this as a setup actually. We bounce all the way back up to the intraday high, a little bit of a pullback, and then from there we go and then we take out the other gap, but this time it's an upside gap fill to 5572. So this might be a double gap fill type of a day where we did gap up technically where we opened. So there is a bit of a downside gap fill. Once again, 5528.11. That is the high from Friday's trading session. Wouldn't mind hitting that right now. We bounce right off of it, get right back up to the intraday high, key open interest level. Then we consolidate there, and then we have a nice leg back up to the upside gap fill at 5572. So will that be how today plays out? I have no idea. I mean, I wouldn't be complaining whatsoever because that would make life actually relatively easy. Like that's kind of a slam dunk trade, but time will tell. Time will tell. Someone said a missile went off. a missile. Is that what the news is? Is this like a India, Pakistan type of a thing? Is that what we have going on right now? 25 minutes ago, Pakistan's defense minister says military incursion by India is imminent. Pakistan says in a normal armed conflict, both countries should refrain from using nuclear weapons. All right, so the market might be what's going on. The market not so stoked at this concept of a new global conflict. So that could be what we have going on. What is this one? Today's AM note is publicly available. If we are all clear, then where is the liquidity? Someone aggressively bought 3.9 million worth of Tesla 290 calls at open. An hour ago, White House Besant will brief press on tomorrow, Tuesday. Looks like they will be announcing a Japan and or India trade deal tomorrow. So that could be some interesting news. So Besant, Treasury Secretary, speaking tomorrow, addressing the public. Definitely pay attention to that. Am I seeing any other breaking news? Breaking news. Not really. Anything else from Kobe here? Nope. Okay, back to the markets. Well, if you played the gap fill, congrats, because we just got it. Now the question is, can we pull out of this? That's the golden question. Obviously, we went from nice bullish momentum to something happened at 9:49 where someone was splashing the pot. I could show you right here in the options market. We'll start with the SPY, but you could see it right where my cursor is, 9:49 and 30 seconds. So pretty much just 20 minutes into the trading day, someone sold a bunch of calls, call delta drop. Someone bought a bunch of puts, put delta drop. When you have both deltas dropping from the call side and the put side, it has like a 2x effect. And then look at where it led to, just this complete bleed off right now. On the Mag 7, it was even worse. Calls dropped, puts dropped, delta clearly dropped. We puked. It tried to recover. The market said, nah, and then we just continued puking. So we had a nice bullish push for about the opening 15, 20 minutes. And then right here, I mean, I'm showing you right where it turned. It got a little bit bloody, got a little bit brutal. And now the question is are we actually going to break down on the 5-minute, the 10-minute? Is that going to test? But are we just going to bounce right out of here? Your guess is as good as mine. The NASDAQ on a relative basis, since we opened today, it's a bit weaker than the S&P 500 counterpart. A bit weaker. The 5-minute's already breaking down. The 10-minute might be breaking down. The 30-minute maybe we hold. So I'll be watching this for sure. Does the 30-minute on the NASDAQ hold? And then I'll be looking at this 10-minute over here on the S&P 500. So once again, these are both on the futures market. Watching these future contracts just because they trade on the Globex session. So it's easier to get more data because it's trading 23 hours out of the day. That's the Globex. That's definitely the Globex. So let's see. A tale of two stories for sure. Yeah, it just right here, 9:49 got smoked, and we are now trending pretty hardcore. Everything did as well. This isn't just for the market. We're seeing it in individual individual equities, individual tickers as well. Tesla going from 294 to 284. Meta going from 556 to 547. Trying to hold green. Tesla's actually officially red. MSTR is getting hit by about 2.3%. Man, we started off strong, and now I'm seeing things down by 2+%. That's crazy. Country on high alert. We will only use arsenal of nuclear weapons if there's a direct threat to our existence. So, okay, it does seem like there's that right there over the past 10 minutes, that little sell-off does seem to be the market's hesitation related to whatever the fuck is going on between India and Pakistan, and it maybe we bottom, but I would obviously on any same as every day express extreme caution right now because clearly we have news still sending the market haywire one way or another. That is nuts. All right, what do we have? Senator Josh Hawley is reintroducing the Pelosi Act. It would ban members of Congress and their spouses from trading stocks. All right, what do we have? Pakistan Defense Minister says military incursion by India is imminent. Pakistan Defense Minister says in a normal... All right, that guy's literally just reposting what someone else already posted. What do we have here? The stock futures move lower as uncertainty rises with the 90-day pair of pause now 20% complete. That was 12 hours ago, though. That's not breaking news. Do we have anything on financial juice? That's from the RCB or the ECB. All right, we are just waiting. We are waiting. Pakistan says military action by India is imminent and welcome to World War III. Yeah, so it seems like the strongest reason for this news is Pakistan, India. So that whole sell-off, we were bullish. We got the news at 9:49. Bots went a little bit crazy, knocked the market, and then clearly people did not feel like buying the dip, and we are still dipping. Maybe we're seeing a bit of a bottom on this overshoot of the high and the close on SPY. The SPY is officially red. Same thing with the NASDAQ. So I guess what goes up must come down. Unfortunately, we just went down much more hard than anyone wanted to see it. Like I said, I'm looking for this 10-minute test to hold right here, testing the bottom of the cloud. And on the NASDAQ right here, the 30-minute test, I'm looking for that to hold. If we continue past these intraday lows, that's not so bueno. Is the options market improving at all? Okay. We are seeing an improvement right here. The SPY is trying to do something. Look at that. A nice pop in this delta. The Mag 7 kind of flat, actually. Kind of flat. Yeah, we're seeing. The question is just where this pumps. Is it just going to be a lower high, or are we actually bottoming here and the market's going to digest that news and basically say, nah, we're good, and they buy that dip? 5-minute trying to hold green, 10-minute trying to hold green, 30-minute is confidently green. 5-minute, 10-minute are in the red territory on the NASDAQ, but maybe it's able to push from here. Maybe we could do something. I still haven't done any trades today. Just if you guys are joining in now, wondering what I'm doing, I'm kind of looking at this retest of VWAP right here. VWAP is the volume weighted average price, as in that is the average price transacted at today. Commonly, it's thought to be bullish above and bearish below. As you can see on this news, we slice right through it. That's a bit rare. Generally, you see a bit more of a reaction, a bot reaction to VWAP, and whether you have buyers or sellers. But this time around, because it was so news driven, once again at 9:49 is when we saw it right here, this breakdown. That just led to this waterfall. Randomly basing at 19,432, and surprise, bouncing right back up to not only that key psychological level of 19,500, but also it happens to be effectively exactly VWAP. So I'm wondering if this little fluke right here is just people buying it out on discount and we pump it right back up. Dude, it's our 4-year anniversary. Thank you for the great mornings. I've become such a better trader because of you. Thank you, homie. Keep it going. Justin, I appreciate that so much. 48 months. We're practically married at this point, Justin. We're more than halfway to an actual government recognized marriage. I appreciate that. And I'm happy to hear that your trading is improving. It reminds me honestly of why I do this kind of a thing. All right. Let's see. It's past, what time is it? It's 10:05. So I did properly wait more than 30 minutes. I waited for, it seems like every day we have some random news at some point in the first 45 minutes of the day. And if you're on the right side of it, great. It can make you a lot of money. But once again, if you're on the wrong side of it, it could just completely demolish you. And I'm wondering if we're going to be holding VWAP here. The old VWAP recovery test. How are we looking in flow? All right, the Mag 7 is flat, not bleeding anymore, but flat, not really picking up. The S&P 500 had a nice pump, a pullback. The question is this just a lower high and we're puking from here? Or are we actually on our full recovery mode and we're going to base and then pop out of it? Obviously, your guess is as good as mine, but let's see. As of right now, the SPY is having a tough time. The S&P 500 is having a tough time at the high and the close from Friday right here. That we popped right back up to it, and it's seemingly struggling, while the NASDAQ is having a tough time at its VWAP test. So let's just see. Can we base out of it? Maybe we are getting this higher low. I'm trying to pay attention here because we might be getting to the point in the day where there's a good trade opportunity. We might be getting to that point in the day. You know what I need to do is I'll put price up for you guys to watch here, and then I need to bring up options flow for myself over here and just see if I can see a low risk opportunity to take advantage of. But maybe, just maybe, patience will pay. Maybe. Yeah, we're struggling. We're on the struggle bus. The SPY struggling here. The Qs are, this is roughly VWAP. I mean, you could see that on this screen right here. We went up to VWAP, smacked. Went up to VWAP again, smacked. So it's indecisive. If you're looking at this and you're like, dude, like, is there a way to know, like, will we break out or not? No, there isn't. If your goal is to see this situation right now and be like, okay, I want to know a way to interpret this to know, yes, are we breaking this way or breaking to the upside or breaking to the downside? There is no model on God's green earth that tells you, will we get this breakout or breakdown? And the reason that model doesn't exist is because the breakout or rejection, it is dependent on other people who are about to trade. There's no way to model that unknown question. Like, that's a borderline infinite amount of variables of other traders. Not only are you talking about high frequency traders, market makers, retail traders, institutions, hedge funds, insurance funds, sovereign wealth, you don't know. And we also don't know the news. So the news in itself could impact people either buying or not. So to know if we break out here or not, that's not the question, because you're just never going to get the answer to it. There's no model that's predicting what people are about to do. Undecided candles, yeah, basically every candle is an undecided candle. All you can do is ideally have some sort of bias based on whether it's technicals, fundamentals, options. You have some sort of bias, and then you see if you could express that bias with a low risk, high reward opportunity, and you try to do that time and time again. You don't want to ever put all your eggs in one basket on one individual trade, just because no individual trade is ever going to be guaranteed, folks. So here, like, okay, yeah, if you go long, if you go short, you have 50-50. The question is, what is your risk? What is your reward? And I have to admit, I am kind of getting interested in this. I am getting a bit interested. All right. I'll give it a whirl. I am long at 16 something, 16, 17, 16.5. My risk is 80, and we're going to see what we could do. This is not my profit target. I just put it in there just because, what is that? 516, 616, 667. This, I just like to know where the max I can ride it to is if I decide to trend follow that day. 667, something like that. That's the max I could go to. But what I care a lot more about, especially if you guys have seen this show, I care much more about my risk management, the red line. So what I'm looking for is a bit of a continuation, and then I'll just move my stop to break even, or I'll move it to VWAP or something like that. And if this is a fake out breakout and it knocks me, whatever, no harm, no foul. I'm looking for a free. Why is this not trading? What the fuck? I'm only long one account. Well, that doesn't seem right. I think I'm trading on the wrong account here. All right. What account? Folks, I'm in a bit of a pickle here. I am not trading on the account I thought I was trading on. As you can see, only one got traded, 580. 580. All right. What is this one? 601. 601. All right, and now I don't even have the right order number. All right, this is not going well, folks. I have to admit, this is not going how I initially anticipated this going. Sell, stop, market, just for some protection. Not going how we want it to be going, but I think I got. I think I did what I needed to do. I think I got it in. Yeah. Okay. The orders are there. There's the net liquid. Okay. I think we're effectively back to where I should be. I don't like that I had to chase that before. Apparently, I didn't enable the trade copier, so it traded on one individual account. And who knows? Maybe that was a sign that I should have just traded on that account because these ones are all currently down. But I'm just seeing if VWAP can hold. And if I'm wrong, I have well-defined risk. And if I'm right, my reward is all the way back up to the intraday high. So will this one individual trade work out? I have no idea, but that's not what I'm here for. I'm here for trying to express a good, positive expected value trade time and time again. So if I get clocked right here, that's going to be unfortunate. It's about 40 points. That's about $800. So like I said, that's going to suck. And we're getting real close to it. Don't necessarily feel comfortable. Oh, so I'm using this structural low right here as my risk. My bot is telling me to use 50. Do I want to listen to the bot, or do I want to lessen my risk and use this most recent low? Well, hopefully it doesn't even come to it and we just hold VWAP. See how we overshot VWAP earlier today? The volume weighted average price bounced right back up to it, and now we're struggling. My trade is obviously on the recovery above VWAP and the market wanting to be on the north side of it, which is why my risk is actually just below, because if we push there, basically my read on the situation is wrong. And remember, in terms of being right or wrong, you're going to be 50-50, folks. If you really look at most people and most of their predictions on the market, it's somewhere between 40 and 60%. It's 50% plus or minus 10%. So most of this, especially in this environment where we just saw this whole new sell-off, you're roughly going to be 50-50. That's just how this game is played, especially as a retail trader where we're just not privy to other very important information. So if you're playing a 50-50 game, how are you net profitable is the real question. If you're only going to be right half the time and wrong half the time, how do you make money? Like, how do you keep getting your account to grow and grow and grow? And the secret to that is basically all you have to do is make sure when you're right, your payoff is ideally quite a bit more than when you are wrong and you take that hit. So that's what I'm going to attempt to do is ideally if there is a nice trend, ride. And if I'm wrong, ideally cut it quick. That's the name of the game, is cut your improper trades quickly and ride your proper trades a lot. And I think that's the exact opposite. Well, in fact, the data we have suggests that's the exact opposite of how retail traders engage in the market. All the data we have shows that retail traders hold on to their losing trades far too long, and then when they do have a profitable trade, they get out far too early. Even in here, for those of you who are like kind of returning viewers to this show, how many times in chat have you guys seen it where I go slightly green and everyone in chat's like, seemingly everyone in chat is like, take your money. That's half of the problem right there, is when people are right, they get out way too early, and when they're wrong, it's more of this mindset of, oh, wait, maybe it comes back. Like you start to do that mental bargaining, or you double down, triple down to bring your average down. And we've all been there, tilted trading, revenge trading, whatever you want to call it. But we've all been on like kind of in that mental blender of a situation where you actively know what you're doing is wrong. You just seemingly can't stop yourself from doing it because you're like, no, I'm wrong, but maybe just like this time I'll get lucky, because there are times you get lucky. There are times you're playing poker and you just rip it on 2-7 offsuit and you win and you flop a boat or something like that. And yeah, because it's possible, people get that like that bargaining of like, yeah, but like maybe this time is it. And like, I swear if like this one hits, like I swear, I promise, like after that, I'll go back to good trading, reasonable trading. And unfortunately, sometimes it does hit, and then that gives you what I would argue kind of negative mental reinforcement that it's okay once in a while to kind of step outside of your rules. And maybe it is once in a while, but it only takes that one bad hit. And trust me, from a person who's blown up many accounts, if you're playing with fire, eventually you get burned. It's just a matter of time. It truly is just a matter of time. Japan saying they are standing firm on full removal of U.S. tariffs. Well, it sounds like tomorrow we're going to be getting some sort of update, most likely related to either Japan or India, from the Treasury Secretary himself. Folks, don't forget, shout out to Public. How are these accounts looking today? not the best. But remember, Public is today's stream partner. If you haven't already, sign up for their platform. Free to download, free to sign up. No commission fees, no per contract fees, and you earn a rebate for every option contract you trade. Doesn't matter if you're buying or selling. Doesn't matter if it's calls or puts. You will be earning a rebate. And to start off at a higher rebate tier, use the link pinned to the top of chat. That will start you off earning more money than you would if you just normally downloaded the app. So please check that out. And then also, what do we have going on here? All right, so the SPY ripped, bigger puke, bounce, and now we're just getting pinned to the previous close and the previous high, trying to break out as we speak. The 5-minute trying to hold green, the 10-minute bouncing off green, 30-minute green the whole time. The 5-minute, this is now clearly resistance on the NASDAQ. We're trying to get back above this EMA cloud, and it is having a heck of a time, one heck of a time. While the 10-minute here, it did go red and then bounce back green. The 30-minute did save itself. So it seems like dip buyers are coming in. It does seem like the short-term bears did take some of their profits. But what I find concerning is, yes, the SPY is looking a bit stronger. The SPY is seemingly hungry to get this push and follow through. But it does seem as if tech is slowing it down. Right here, you could see the 5-minute having a real heck of a time getting on top of its EMA cloud. You can say here, like we're trying to hold VWAP, but like we're not confidently getting away from it. So we are, if you're like me playing in a bullish position right now, we are not out of the woods because we are just not seeing that confidence follow through. So not in price momentum, price structure. And then I think the real issue here is look at the Mag 7. We are not seeing follow through in the Mag 7, which is why if I had to grade my trade in real time on even the decision making of why I got into it, I would say it's a C+ at best. The trade I took here, which obviously I'm hopeful makes me money, like I'll be the first to admit that it's still a 50-50 chance. But if we were to, in real time, give me a report card of the decision making involved getting into this, it was basically a catching the falling knife dip buy situation, and that would be fine if we saw more optimism, but we're just not. Granted, the SPY is seemingly trying to pick up, but the Mag 7 isn't, and I would say that drops this trade multiple letter grades, just because not everything's aligning. Granted, maybe I get lucky and I got into it and maybe I'm a little bit early, but maybe all of a sudden someone comes in and the way they splash the pot in a negative way earlier today, of course it could happen. Maybe someone with deep pockets splashes the pocket or splashes the pot and they rip it back the other way. But obviously that type of stuff is completely out of my control, I don't know what they're going to do. I don't know what they're not going to do. All I can tell you is the decision-making involved going into this. And as of right now, I would say at best, it's a C+ trade. At best, the trade I took. So, I mean, whatever. You can make money on an F trade and you could lose money on an A+ setup. I'm not saying the grading in itself is important in you making or losing money. Ideally, you're only taking the high tier ones because your odds should theoretically increase of you making money. But when you're isolating one individual trade, like I said, you can lose on pocket aces, you can win on a 2-7 offsuit. So we're going to see how this individual one does. The only thing I could really do here is respect my risk, and I already have my risk set, like those, that's already in. So if this starts to break unfavorably, if this starts to break clearly in a direction against me, my stop will get hit. It's not going to be one of those things where I pull my stop and I'm like, oh, well, hang on, I'll give it a second to like come back. Like it's just, we're just waiting. Just waiting. The SPY is attempting to break out. It is the tech sector that is currently holding it down. The SPY is actually above its high on Friday, while the tech sector is below its close. So two different stories being told. The SPY nicely green, not massively green, but when I say nice, it's above the close and above the high, and it's seemingly sitting there. While the flip side, the Qs are having a hell of a time even getting back into the green territory. So I'm roughly here. I mean, literally, it's just as soon as we got this pop back up to VWAP at 10.05, I tried to take this breakout continuation. I waited for the pump, what I thought was a higher low, and granted, it is holding. I try to catch this follow through, and as of right now, I'm slightly red on the trade, but we are just literally being pinned to VWAP, on the NASDAQ. And then if you look at the S&P 500, it's trying to go. Like the overall market's attempting to go. It is tech that is keeping it behind right now. And another way you could see that is right in the options market. Look at this. The SPY is picking up. Let me go to the 30 second. It's just a bit easier to see. We popped, we dropped, we popped, higher low. We're getting that follow through. The Mag 7 is doing fuck all. In fact, the Mag 7 just made a fresh delta low. How is let me look at the NASDAQ specifically. Even that, yeah, it's just, we're seeing on an intraday basis, the tech sector is a bit weaker right now. It's a bit weaker. So because I'm not the biggest fan at all, and self-admittedly, this is not the highest quality follow through, not the highest quality trade. I'm long at 23. If I can get fortunate of even with a little bit of a pump in my favor, if I could get fortunate, I will aggressively move my stop to break even, just because I thought we would be quicker to getting out of the woods here. I'm just not in love with it. So just to protect it, the fact that I already have all my buffers like filled out, I could go to a static stop loss. So like I said, if I get a little bit of a follow through, I'm talking like a tight fall, like 40 or 50. Like if the market goes here, definitely buy 60. Stops coming right up, just so I could go to a lottery ticket play. Lotto ticket play, just because my big concern is the NASDAQ is showing not strength. In fact, it's showing weakness. Same thing with the Mag 7. Even this, now the SPY. I was hoping that the SPY strength would get enough bulls excited and then prompt us to get a little bit of fall through in the NASDAQ in the tech names. But if anything, it's going the other way. In fact, the NASDAQ's so weak that it's starting to drag the SPY down. I'm about to get clocked right here. About to get clocked. It just, the VWAP recovery failed. Yeah, I just got clocked. Shit. Well, let me just make sure all the orders are canceled, because I really did mess up my orders. Why does it show that position's still live? That doesn't make sense. But it shows that I'm out here. Looks like I'm already having some data issues. Okay, I had to kill it in Rhythmic, but there were just pending orders. But anyway, I protected myself just in case, because once again, we might bounce off of this. This might just be a nice recovery and we rip. That is totally possible. You know what's also possible is a waterfall vomit and I lose all of my accounts. Folks, I'm much, much more focused on the potential worst case scenario than the magical recovery, which is, of course, fucking happening right now before my eyes. Of course, just enough to, like, literally, it like just got me out. Wow. That's unfortunate. Is my bot really? It is going to fire long. It fired long again. Shit. Fuck, man. Just enough to wake me out. Oh, brother. It's going to be one of those days, isn't it? It's going to be one of those days. All right. We're going to see. Just following the bot, following the system. Stop, limit, stop, market. All right. I got wicked out. Unfortunately, you could see where I exited. That little pink triangle, it just knocked me out just to pop where I would be green. And it happens. Is it a frustrating thing? Of course it's a frustrating thing, but that's what trading is. If that type of unfortunate break like messes you up so much, it's going to happen to you. And I like to think of it in the way that luck in itself kind of balances out. Sometimes you get the unfortunate beat, and other times, like, you top ticket and you got the perfect profit of the day. I think in the long run, it kind of averages out. So like, as much as we all like want to focus on like, oh dude, I just like, it always wicks me out. And like, yeah, it's the more and more you trade inherently, the more you do, the more you're going to find situations like that where I just got a horrible bad beat. And unfortunately, it cost me a good chunk of change. It cost me $800 per 25 accounts, barely knocked me out. And then it ripped anyway, to the point that right now I'd be break even. It happens. It happens. And now am I going to get chopped up again? Mine, part of my bot actually just went long because of this pump above the close, which is now getting swiftly. Dude, am I going to get diced up 2 in a row? So unfortunate. Just fake out, breakout number 1, fake out, breakout. No, dude, I'm going to get diced up twice in a row. What bot am I using? My bot? My background's in computer science. I create my own. The bot did tell you to drop your stop loss. Yeah, but technically the bot would have never gotten hit. The bot was at 50 at that point. Technically. My stop right now is at 78. The bot is saying use 70. Somewhere between 68 and 70, I'm seeing it's coming across. Just reading some of this vol. I could move it down, or I could save myself 8 points. Fuck, dude. Really, am I just going to get 2 bad beats? 2 bad beats? I did just move it down to 68. I did originally just use this structural one, and now I'm just using what the bot is telling me to do. So I'm trying to give it room, but I'm not liking it right now. If I were to lock in this, I traded once. That was the loss, as you guys can see, of 850, 860. And seemingly the second one could be 1,000. Dude, do I really want to take 2 hits on this? Oh, just trying to play. Obviously, we had a nice range, consolidation. Naturally, in the market, you go from periods of expansion to consolidation, expansion, consolidation. And really what I'm attempting to do here is play the consolidation break to expansion. And the bot right here really thought, great, we're breaking. It's going to be bullish, hence why it triggered long. And now it appears that we are not breaking consolidation. In fact, we are just horribly stuck in it, which is painful. But the more painful thing is, what if we do break this consolidation, but we break it to the south side and I just get demolished for the second time today? Oh, I just need to keep the train on the tracks and not do something stupid. That's the goal. Just don't. You're going to have losing trades. Half my trades are going to, actually, I would say half my trades are break-even trades, a quarter of my trades are losing trades, and the other quarter of my trades are winning trades. That's roughly how my system works right now. Well, roughly half of them are break-even, a quarter of them are losing, a quarter of them are winning. So if you're break-even, whatever, you're zilch, not a goose egg. Like, it's just neutral. My goal is that those losses, the quarter of the time I take a loss, obviously I need to keep them of a size that it's manageable, that my quarter percent, like my 25% of the time that I win, I could obviously pay off those losses and then some, and then some, and then some. But dude, this is not making me feel good. We have multiple distinct attempts of the NASDAQ attempting to get above VWAP, and we are just not getting that follow through. At a certain point, the more and more you try something and you keep failing, it tells you something's going on. Oh, it tells you something's going on. I'll feel much better if we can get above this high that we just posted at 539, but if anything, we are way, way closer to actually knocking me out. Way closer to knocking me out. So I'm not feeling the most optimistic about this one. Shit. Not feeling so good. Yeah, the SPY, everything tried to get going here at 10:24, and then it's getting a little bit clocked. 5-minute questionable, 10-minute bullish, 30-minute bullish, 4-hour bullish. 5-minute is red, 10-minute is red, 30 minutes bullish, 4 hours bullish. I basically need this to be the bottom, like right here, and for us to bounce off of it, or I'm about to get my clock cleaned for the second time on the day, and it might just be a shit day. I'm about to get smacked again. Fuck. Yep, right there. Smacked. All right. So I was up 6K and I just gave back a third of it. So in 2 trading days, 3K, 3K, 6K in total. And right now I just gave back 2. So I gave back 1/3 of my profits over the past 2 trading days. And obviously 2/3 of what I made on Friday. That is a bummer. It might just be this shit day. Nice longing at resistance twice. It wasn't resistance at all. Like, I like it. There's always, this is just, you know what I'm going to do? Is I'm going to look for, I need to set up this alert. It's always interesting, the peanut gallery of people who like think they're so good at trading in their commentary. Once again, folks, retail traders in aggregate do not make money. You guys are right. When you have a thought or opinion, I notice how when you're right, you're 50% of the time, you're real loud, especially if it's against my trade. And then when you're wrong half the time, you're real quiet. So it's always interesting to see your commentary and what the peanut gallery has to say, because you're real stoked when you're randomly flipping a quarter and you're right, and you're real quiet when you are wrong there, and you're like, no, you kind of fade away. And I mean, my total cumulative profits, I'd much rather be in my position than your position. Can you chirp me because I got a trade wrong? Yeah, I mean, I'm telling you, I'm going to get half my trades wrong. That's generically how the market goes. If you're holding any trader, especially like whatever, a content creator like myself, to the standard of making money every single trade, that's just fucking stupid. Like, actually fucking stupid. So, I mean, you can chirp me all you want, but at the end of the day, I'm up hundreds of thousands of dollars this year, while you're most likely not. In fact, I would bet the amount that I'm up that you are not up as much as me. So it's just, I'll take my side of the equation any day. So I guess if you're stoked that I lost that one, it's kind of fucked up, but I'm happy with the trade. I mean, you never know which way it's going to break. Maybe the market really did think that people were overreacting to the Pakistan-India news, and we could have easily popped to the intraday high, and it would have looked like a genius trade. On the flip side, what actually happened was we got rejected multiple times we could just not hold the high value on the SPY. We got rejected at the close and at VWAP on the NASDAQ, and I got my clock cleaned. Oh boy, cocky Matt coming out. It's not cock. Why is that cocky? Like, what? How is that cocky to just say something factual? That if you, like, the peanut gallery in here would love to see your history of trades, not one individual trade. That's not a cocky thing to come in here day in, day out, show you exactly my thought process, what I'm doing, explanations, stuff backed by like actual like research, actual statistics, like actual empirical evidence. And then I express that. I explain it to all of you. I trade on it. I make money. And then you're like, well, that's cocky. How is that fucking cocky? Like, that doesn't make sense whatsoever. It's just like the fact of the situation. So silly, but that's what the peanut gallery is. And I mean, after doing what I do for as long as I've done it, you kind of just learn to think, well, you learn that everyone has an opinion, and people very, very much enjoy when you mess up, probably because you finally had a trade. But like I said, at any point against anyone in here, I'm more than happy to compare long-term results. Overdo it. I mean, I've been in points where I'm actually triggered, and this is nothing. This is just like a normal trading day. If you think that this is some sort of like outside of the bound of like an emotional reaction, I think you just have the emotional fragility of a middle school girl. Like, this is nothing. Like, seriously, if you think that this is some sort of like outsized emotional response, I think you would just have to like maybe like really ponder this and self-internalize and just try to figure out if you're like a pussy or not. because that's kind of the vibe I'm getting. If you guys think that this is like something emotional, you guys have not traded with actual money. Then you have not traded with real money. You have not been in like true high intense situations, because this is literally nothing. This is like absolutely nothing what's going on right now. This is actually recent to the past couple weeks, past couple months. This is actually a bit more quiet than anything's going on. So, yeah, like if you think this is like a heightened emotional time, a heightened emotional response, I highly recommend like looking deep within yourself and just asking like if you are in fact a pussy. That would be actually probably the best thing you guys could do. Oh, the bot wants to go long one more time here. Do I take it? Yes, no, maybe so. Do I take it? Do I take what the bot is doing? All right. We're going to give it a whirl. We're following what the bot is saying. We're doing what we can. All right, just the position is a long position. The position is a long position. The bot's a little early to this trend line breakout. The bot has nothing to do with the trend line, but the Qs are trying to break out, and the SPY has not broken out yet. But I just followed the bot. Once again, it's just roughly aligning with the trend line, but it is not a trend line bot. But as you can see, I just went long for the third and the final trade of the day. It is 10:38. My edge statistically disappears between noon and 1. Recently, it's been disappearing earlier. All right, that intraday high is at 439.40. So on that push there, I'll probably bring my risk up. The bot, 55, 54. All right. We're going to see. We're going fishing. We're going fishing. We're going to see if we could catch something today. We're going fishing. I hope this one hits. More of just to like absolutely clown on you guys. Justin Kennedy, yeah, just passed an eval. Congrats, man. It feels good. Like there's like that little stress moment of like, especially when you're getting close and you like need those couple extra points, dude. We've all been there where you're like, just go like just a little bit. Like you just need that extra 1 or 2 points. And then sometimes it's like, you're just waiting. You're like, dude. And then it hits. Oh man. We've all been there, but seriously, massive congrats. I don't know if it's your first one or not. If it is the first time you passed the test, an even bigger congrats. That's always a great feeling. If you're on something like Apex, you're going to get an update email around like 6 or 7 p.m. tonight where it'll be like, congrats on passing. Like, follow these steps to upgrade it. So if you are on Apex and you just passed and it's your first time, the email is not going to be automatic. They have to wait for the futures market to close. It closes between 5 and 6. It takes 1 hour off. And then sometime in between there or right at next market open is when you get that email. I love Training Day, Matt. I run this shit. King Kong ain't got nothing on me. You tell him that. These rants are my favorite part of the day. Shout out, Josh. I appreciate it. I mean, people won't say it because like inherently it's bad for the business of gurus and furus. But I very much agree with Warren Buffett that trading's not for everyone. Not everyone has the emotional aptitude and the ability to handle it. You get a lot of fucking bitching and whining and just, I don't know. Trading's not for everyone. And I hope if you are actively trading, you're taking the steps that are appropriate for you to kind of facilitate the personality that you need to have to be able to survive this game. And it's it's a weird paradigm. It truly is, because at a certain point, like, you have to have confidence in what you're doing, but then also on a moment's notice, the second like that you're actually getting the reading that you're wrong, you also have to admit you're wrong. So it's this like weird thing where you have to have a high amount of confidence, because like that is going to be an important part of like the psychology makeup of a quality trader, of like, yeah, I'm betting money's on the line, but I'm like confident it's going to go my way. Like, so you have to have this higher end confidence, but then also simultaneously, like, for example, that's why I'm always using my risk, is like, when you're wrong, you're just wrong. Like, you have to just like be like, yep, this is what happens in trading, and you got to be able to move on with your life. That shit happens, and unfortunately happens a lot. Low volume chop. Well, the volume's always naturally going to come down after market open. By the time you get to 10, 10:15, 10:30, volume lowers. But honestly, in this higher volatility environment, I'm not going to mind that at all, just because like our ranges are so large. So in a normal environment, the midday gets like real low volume to the point that it's boring. In this particular environment, the low vol kind of brings back like periods of time that are almost similar to the high vol that we had like 2 or 3 months ago. So I would say that is like kind of timing specific. But like I said, the bot, which has nothing to do with the trend line, kind of unfortunately front ran this breakout early, and I'm not the biggest fan of it. I would rather have confirmation of the breakout before I go long, but unfortunately I got in and basically saying, yeah, no, like, we have to break out. And if it happens, great, because then I got in with less risk. But once again, the accuracy of the trade is going to drop because we don't have confirmation of the break quite yet. I just lost 50% of my portfolio. You're playing far too big. If you are risking 30% of your 50% of your portfolio in one trade, you're simply sizing up. You're playing with too much size. Like, you should never ever be in this situation. Worst case scenario, you should never be in the situation where you can lose 50% of your account. If you listen to very, very, very conservative thought in trading, you should never be risking more than 2%. I found that in the world of retail trading, generally our accounts aren't big enough where 2% really makes sense. Because if you're like, wait, I'm trading with a 25K account, like 2% is not going to be economically impactful in your life. So then you're thinking to yourself, well, why am I doing this anyway? So I would say the degenerate interpretation of that 2% rule is more like 10%. Like, I really like it is. If you start taking more than 10% hits to your account, it becomes very difficult to recover. Very difficult to recover. I think the bot is following Jim Cramer's plays. As of today, it seems like that. I've gotten, as I said before, I've already got my clock clean twice today. So for me to even get to break even, I would need quite the return. I would need, just for me to now get break even, I need it all the way up here. That line, that's just for me to be break even on the day now. So I'm hoping that the next trend is a strong one, just because for me to even try to get break even, I need it all the way up here. I was just marking this one out because I was curious of this recent high, a nice technical breakout, but it is this top horizontal teal line. That's just my break even line, which it does not escape me of how much of a pain in the ass that is. Actually, so for me to be break even, it just happens to perfectly align with the high of the day, which is not a good situation to be in. Not a good situation to be in whatsoever. Looks like we're going to have a struggle at 580. Looks like we're going to have a struggle at 590. Maybe a struggle at 600, 610. There's just like 80, 90, 600, 610. I need to overcome 3 or 4 different intraday levels of resistance just for this shot of being break even. Of course, I could cut it in half by doubling up, and then all I would need is like somewhere in here and I'd be break even, but I just don't want to take on that risk. I care much more about the risk than I do that reward side, because if I double up and it goes wrong again, well, then I'm the person who blows out even more accounts. It's just not a smart strategy. We are seeing a potential breakout on the SPY, not really confirmed yet. I would say it'd be confirmed if we take out 55210. Same thing on the Qs. We're trying to break out, and I would say confirmation comes at 472.78. So, and actually, I'd feel way more comfortable if it gets above Friday's high at 473. So, what I'm looking for right now is for the Qs to push an additional 40 cents and hold that, and I'm looking for the SPY to push an additional 40 cents as well. So, I need both the SPY and the Qs to push another 40 cents and to hold those levels, and then I'll feel a bit more comfortable. And it's probably in that event that I will be moving my stop to break even, or maybe even this. I could just keep following the bot. Which right now is at 70. Right now it's at 60. Yeah, 70 roughly. So I'm just going to keep slowly moving my stop up higher and higher until I can get to that like relief size situation where I can put my stop at break even. And then from there I have the lottery ticket, and then hopefully the lottery ticket takes care of my two fake out breakout trades. I got caught up at 1010. I got caught up at 1024, and I'm hoping that the third time's the charm. But like I said, the further we go on in the day, my edge starts to disappear. So I need to be very, very mindful of that fact. Very mindful of that fact. I'm not really in love with any of the trades I took today just because the Mag 7 options flow looks like shit. So that's probably part of the reason why I'm getting chopped to Kingdom Come, is because we're just not getting nice options follow through. So like, albeit these have been weak trades, I wouldn't really put them in such bad territory, like horrible territory, because yeah, the Mag 7 looks like shit. The SPY is looking way better. 5 minute, 10 minute, 30 minute, 4 hours bullish, 5 minutes recovering, 10 minute, 30 minute, 4 hours bullish. So there are things going in my favor. It's just obviously not an A+ setup, I guess is what I'm trying to articulate. Like I said before, they're all, the first one was the C+ setup. The second one was a C setup. I would say this third one that I'm in right now is more of a B+ setup. We got this fake out breakout to the low side. We didn't pierce the low. 1030, we got that reversal. So the trade that I'm in right now that I'm like, look at that. The one that I'm currently green on is, I would actually argue, has been the highest quality setup that I've taken, but it's still somewhat out of my hands. Our trader's going to be aggressive enough to break out these recent highs. We just kissed it, because at this point, it literally could just be a double top rejection. Easily could be a double top rejection, which is why I'm kind of saying, okay, if we can push and hold above 50, like a little bit more, that's when I'll probably aggressively move my stop up and just take all my risk off the table. And in a normal circumstance, if this were my first trade of the day and I had my max buffer and all that good jazz, I would probably be giving this trade more room to breathe. But because I already got like taken to the woodshed twice today, loss of 800, loss of 1200 for a total of 2K, I need to be even more protective of my overall account, my overall portfolio. So I'm definitely in more of pain mitigation mode. Pain mitigation. Yeah, just getting chopped today. That's the tough thing, though, because you never know when consolidation breaks. Like right here, you could say, first of all, when I took this first trade at 1010, we puked, we bounced, we put in a higher low, and then we went. For all I know, no one in here knows. We could have just kept ripping, and I would have seemed like a genius. We could have turned around. That could have been a lower high, and we puked. Or what actually happened, chop, 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 chop. You just don't know. All you can do is base it on the information that you have at that moment in time. Second trade of the day is like, okay, little fake out. I got wick there. Looks like it's a double bottom. We start to recover. We made a fresh high. Okay, cool. Double bottom low, breakout. We're holding above VWAP. We're going to rip, go long. Guess what? Fake out. You just never know. If I show you this information right here, if I just froze the market at 1024, no one in here would be able to say, oh yeah, no, like we're definitely going back down. You don't know. You could easily rip and I would seem like a genius. You could go sideways, or it could be of a fake out push, puke. We puke even more. And then guess what? It's an overshoot. And then we recover all the way back up here. You just don't know. I think if there's one thing that you would take from my show that no one else in the retail education, entertainment, whatever space you want to call this, which it always sounds so weird when you do that, is you just have to admit the things you don't know. There are many people who won't tell you the truth that a lot of this game is not, something's going on. There was just a flash, like you could see it coming across on the tape. There was just a big flash of volume. A lot of trades just painted on the tape. And they did not paint green. That is for sure. And all of a sudden, the potential double chop rejection call out is seeming more and more real, unfortunately. What the fuck just happened? Dude, am I going to get chopped up for the third time today? Well, here, I'm going to give myself a little bit of a breathing room just in case we double bottom there. Damn, someone just painted the tape and smacked it right back down to VWAP. I am not feeling good about that. Not feeling good about that. Defensive little girl today. Is it defensive or is it just actually explaining in an attempt to make, especially the people who are newer to the audience, better at trading? Once again, if you think that this is an emotional response, I think, Jared, especially to you, maybe you should just really, really you got to internalize and ponder this. Like, are you maybe just like by chance, are you just a giant fucking pussy? Because that also could be like, I think a pretty reasonable explanation to this. A pretty reasonable explanation is just like you being a giant fucking pussy. Some people have zero clue when it comes to naming their child. Yeah, Gerard. Yeah, some parents just don't know how to spell. Could be. Could be, don't know, wasn't there. You would think that you could like Google it though. Gerard. Gerard. J-Rod. Maybe his name is Jared, but then his username is J-Rod. That's obviously possible. Uh-oh. It looks like I'm about to strike out on the day and get crushed 0-3. 0 for 3. Dude, it is having the worst time holding this breakout. It is, look at this. We had a pump, we had a dump, and then ever since 10:05, this market has sucked ass. We've just gone nowhere. Fake out breakouts. Like even this, we try to get this trend line breakout. Nothing, smacked. The Qs are, the market in aggregate, as in active traders in the market, are refusing to allow this thing to go green. The second it gets above the closing value, smack, 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 smack. Every single time it looks like it might just get going. It just gets destroyed. Yeah, I'm about to get cleaned again. We're trading at 88. My stop is at 75. 85. I have about 10 points to go, and then I am striking out on the day. Just various times trying to play the recovery from this sell-off, and the dip just keeps on dipping. The dip just keeps on dipping. And it's going to happen. Sometimes when you get these breakouts, it is that perfect entry, and you have your risk at the most recent low, and it rips, and your risk is even tested. Other times, like what we're literally seeing in real time right now, it's a fake out, and that's why you have to have your risk. Like, it's just why you have to. You never know. You never, ever know. All you can do is say, hey, this is the risk I'm willing to take on the situation, and do everything in your power to just like actually stick to that risk. Because if you can stick to the risk time and time again, at least you have a shot to survive this craziness. If you are not sticking to your risk, it only takes that one fake out, that one reversal that keeps trending and trending and trending for you to completely blow out. I'm telling you, it's happened to me probably thousands of times where you're there and you're at your risk, and there's that voice in your head, and you're like, all right, like I'll give it a little bit more room. just a little bit, like maybe it comes back, like this is just like whatever. And unfortunately, sometimes that little voice by pure miracle luck ends up being right, and you gave it a little bit more room, and then all of a sudden you were great, and it reversed and you made money. And that's actually the worst lesson you could possibly learn, because if you do that time and time again, eventually your luck runs out. In a series of 100 trades, you have your risk set, and let's just really like screw with the numbers, and let's just go through this like hypothetical with me. Let's say 99 of the times you take on more risk than you are comfortable with, and you are blessed with like a miracle recovery. Great, awesome. It only takes that one time that the reversal is like legit, and it keeps trending, and you just get destroyed. So even if you trade this way, speaking of that, I'm about to get destroyed here, right here. The reason why I'm not giving this more room, even though there's still, once again, a pretty decent chance of a recovery, is because of that one offset chance. Here it comes. Here's the pain. That one little % chance that you're legit wrong, and it goes and goes and goes. So all that money even made in the miracle 99 times where you're like, yeah, I took on risk and it came back, and look at, I have all this profit to show for it, doesn't matter, because that one little trade that you didn't get lucky with, it's going to erase all that profit. So remember, we're here trying to, no fucking way am I going to get this lucky. No way. No, dude. Is it? No, I was going to say that was a nice pump, but quickly faded here. Just got stopped. Yeah. So this is the third day of these accounts. I just gave back the profit, a little bit less than the profit that I made on Friday. So I just got to call it. I got to not be stupid. I got to be smart. This is just not going the way I need it to go. And the reason why, even if we bounce out of here, of being stringent, is coming back to that math of if you are absurdly lucky, you have to be perpetually lucky every single time, because it only takes that one trade in 100 where the trend actually doesn't reverse. You were wrong. It keeps going, and you lose all that profit that you made. It just takes it that one time. So because of that, you have to treat every single one assuming that no, if it reverses, it's going to be legit bad. So why don't you, instead of buying the top, buy all those bottom wicks or double bottoms? That's because that's not a way to be profitable. I don't know. That the direct answer. It's kind of I get those questions, and they're just such stupid fucking questions. Why wouldn't you just buy the bottom and sell the top? Victor, I never thought of that before. In my entire trading career, I never ever considered the fact of, why didn't I just trade perfectly? Buy the bottoms and sell the highs. What a dumb fucking... I guess to directly answer the question is because I didn't know where it was going. What a stupid fucking question. Hey, why didn't you trade perfect? Why didn't you go short on this bar, go short on this bar, long on this bar, short on this bar, short on this bar, short on this bar, long on this bar, long on this bar, short on this bar, nothing on this bar, long on this bar, short on this bar, nothing on this bar, long, nothing, long, short, and short. Next time I'm going to consider that. Next time I'm going to realize that maybe I should do that. No, that one wasn't rage bait. That guy was legitimately asking. Folks, I don't know how many times I have to drive this point home. You do not know the next bar. Inherently, this idea of looking backwards as if you would know that was a top or not. You inherently do not know that until other trades take place. So every single bottom, let's go back to 10 a.m. 10 a.m., right? Where was 10 a.m.? Right here. I show you this picture. We now know, because of how today played out, that this was the bottom. But in real time, what a stupid fucking question to say, well, why didn't you just buy right there? Because, what if it just kept diving? What if it just went sideways from there? The point is, you have to willfully admit what you just simply do not know. And this is one of those situations that you just don't know. And yeah, granted, it bottomed and it ripped. And if you for arbitrary reason went long at 19,440, yeah, you made a lot of money and you'd be looking pretty good. But you just have to know what you don't know. Like if any of your thesis comes based on information that played out after the fact, it's just shit you don't know. I went long right there. Yeah, guess why? Looks like we're recovering. We popped. We puked. The news is bullshit. We made a higher low. You're buying the breakout. You have well-defined risk. If it rips, it rips, it rips. Great. I'm not buying an extreme of the day. I'm not shorting an extreme of the day. Guess what? Ended up chopping right here. Got wicked out, just went below it, popped anyway. That ended up being a fake out breakout. Then we overshoot it. We don't make a fresh low. We pop. Looks like it's going to recover. Higher low. Great. We almost, nope. Double top rejection, just enough to wick me out. Wouldn't be surprised if this recovers. But once again, the reason why I'm just not giving it that much wiggle room is because there is that off chance that these rejections or these turnarounds somehow lead to a legit capitulation, and I just blow everything out. That's the entire point, is right here, right now in real time. No one in this chat and no one on this planet in reality can tell you, oh, the next bar is definitively going to be green. It's going to definitively be red. You just don't know. So it's just a game of risk reward management. So manage your risk. Make sure you're in a potential high reward situation. And when I say high reward, it's relative to how much risk you are currently taking on. And then you just go from there. Ideally, your odds would increase if you are on the right side of trend. 5 minute is looking suspect. 10 minutes green, 30 minutes green, 4 hours green, 5 minutes breaking down, 10 minutes breaking down, 30 minute and 4 hours green. So this isn't a perfect momentum setup, which really today's momentum is perfectly descriptive of the fact that we are choppy and sideways, because they're not all 8 timeframes aren't all bullish or bearish. We're getting a little bit of a mixed time frame. 5 minute is questionable. 5 minutes actually bearish over there. 10 minutes probably breaking down. We did literally close below it. 30 minute, 4 hours bullish. So there's mixed match there. But I would say the real telling thing is on today specifically is looking at this options flow. The SPY tried to break out. Yeah, that was a good long. Guess what? There was just no follow through. And then looking, can I switch over here? The Mag 7 is just getting beat the fuck up all day. So at any moment, it could bottom and then we could rip. That's all based on future trades, not in the futures market, as in trades that have not been executed yet. But you just don't know. You just do not know. And I think that's incredibly important. Is of course, in hindsight, everyone's a lights out trader. But has anyone ever noticed that difference, that in hindsight, everyone's a lights out trader, but then when it comes to the real thing, most people are absolute shit traders? And it just shows you what you're basing it off of is probably actual fucking trash. Or it's not trash. It's just stuff that there's no way you could fairly interpret that or know that when you're placing the trade. You just don't know. You don't know. And I think one thing that goes on in this, the retail industry that continually pushes that type of sentiment is when people teach about it, they're not teaching in real time. They're teaching after the fact. So they're basically cherry picking all their examples to find a particular play out that showcases what they're attempting to explain or teach or emphasize. But teaching in hindsight and then doing it in real time are massively different. So you've seen it of all the videos where it's just they're intentionally cherry picking. That's the best explanation of what's going on, is they cherry pick. And they're great, yeah, if you use this indicator and use this, it was so evident that whatever, XYZ. What they don't tell you is the amount of charts and the amount of examples that they had to skip over because it was a counterexample to whatever point they're trying to illustrate, which is why doing the real-time thing and then the hindsight bias are two completely different things. And if one mattered and one didn't, well, very evidently, it's the real-time shit that matters. Because if you're looking into hindsight, no one's making money in hindsight. Literally no person in this world is making money on hindsight trading. Akuma, okay, for real, what the fuck is he yapping about? Trading. Congrats. You're what? The second or third person that is getting muted for just actually being a fucking retard. I'm attempting to teach a very important difference of what's going on in the education space within retail. But congrats to you for being so fucking stupid that you're now gone forever. I would say goodbye, but you can't. So congrats. Play stupid games, win stupid prizes. That they would understand. Backtesting strategies is effectively the same thing. Yes, but then no. Well, it depends on how you look at it. So backtesting strategies gives you an idea of how that setup has played out historically. So it gives you an idea of the edge in that situation of like when that exact setup, like it's basically you're looking for historic patterns to be repeating. So one of the most popular ones, well, not the most popular, but a popular one is this concept of turnaround Tuesday. So if the market drops in excess of 1% on a Monday, the idea is to go long all day on Tuesday because of a recovery. So historically, that's worked somewhere from 75 to 80% of the time, depending on the data set that you're looking at. So it's that back testing. It is looking at patterns that have played out, and you're betting on that pattern continuing into the future. Now, that is obviously a bet. Maybe the pattern does not continue. That is something you have to consider. Sometimes there are very, very strong strategies that work for whatever reason and they stop working. You can find countless examples of trading strategies that worked for a long, long time until they didn't. So there is a fair mathematical argument of it switching. There are regime changes, this, that, the other thing. But there are other statistical tools you can use to find out if a strategy is breaking down, if it's just variance, or if it's within the limits of your expectation. But yeah, that's what backtesting is basically saying, hey, I'm curious about all the times the market has set up in whatever situation XYZ, and then you're looking for any commonalities of how it's played out after seeing XYZ. So in the example that I'm saying, the criteria you're looking on is the market is down on a Monday in excess of 1%. We now know, well, what's been true up to this day, and who knows, maybe the pattern changes tomorrow. I don't know. But what we know based on all of our current historic information is it is net beneficial to play that bullish the next day. Does that mean it's going to be bullish every single time and you're going to make money for free? No. But it means with proper bet sizing, enough to overcome variance, that is a profitable trading strategy. So like, I think it's a roundabout way to say that it's just pattern recognition time and time again. Anyone recommend following or watching for selling premium? I really want to build my portfolio the right way, not as much as buying calls and gambling like I have in the past. If you're engaging in options, the best thing you could do is sell premium. I think what's the stat I recently saw? 95% of premium expires worthless. So with that stat alone, you should be highly interested in selling premium. 95% of premium in all of the market expires worthless. It expires out of the money, which right away tells you that you can tilt the odds in your favor dramatically by just engaging in the options market in a different way. Instead of buying premium, going long calls or long puts, you would sell calls or sell puts to create the position. We're getting a legit breakdown right now. And actually, this is a real-time example of why I'm happy I got out. Granted, I took a hit, but I got out at 70. I would be $1,000 worse off right now if I held that position. It's because of these events that you just stick to your risk. Yeah, of course, every single trade you put on, you're hopeful and you want it to go your way. But this is a real-time example right now of why you just, like, as painful as it is, you just got to admit when you're wrong. And you just got to be like, yep, take the L and move on. Selling premium is cool until it's not. Well, technically that's true about any form of trading. But once again, we know the odds on this. The chance of you being a profitable option trader dramatically increases if you're a person who sells premium rather than buying premium. And they're practically, like, they're dramatically inverse of each other. Your odds of being a successful premium seller are extraordinarily higher than your odds of being a successful premium buyer. It is hugely more favorable. And if you think about that, it's just because if you're buying premium, not only do you have time risk, but you're also saying, I want it to go in this direction by this much, and it has to start right now. Well, that's a really hard thing to predict, because you're not only predicting direction, but you're predicting how long it will take to go in that direction. Well, if you're selling premium, you're just basically saying, I don't really care where it goes. I just don't think it'll exceed value X, or on the other side, drop below value Y. That's it. It could go sideways, it could go up, or it could even it could go down, or it could even move against you. As long as it just doesn't move against you that much, you still win. So you win in 3 different scenarios. So you win when buying premium if you pick the right direction and the right time. You got to get 2 things right. It's multifaceted, but you need direction and time, as in bullish and bullish right now, or bearish and bearish right now, or before a certain date. If you're selling premium, you actually win in 3 different ways. You win if it trends in your favor, if it goes sideways, or even if it goes against you, but just not against you that much. You just have more ways to win when selling premium. You get the theta decay, which is about the only predictable thing in the market. Yeah, you're going to always benefit from the time aspect. As much as time sucks, the theta decay when you are long premium, it's going to absolutely rock for you if you are selling premium. Like, selling premium, you're basically always just collecting theta decay, collecting. It is a very, very nice thing to have. A very nice thing to have. So if you are a person who right now you're looking at your account and you're like, it's going down and down and down, and you're always buying premium, well, like, what's the risk to you? Try selling premium. Like, if trading's already not going well for you, you're not incurring more risk by trying a new strategy. Like, you're just not. Sell on things you don't mind owning if you get stuck with it. Well, that's a very specific strategy only. That's only if you're selling covered calls, or not even covered calls. You're selling calls that you have the capital. So technically it's covered calls in terms of capital, not necessarily covered in terms of you have the underlying shares, or on puts. Like, I think you're looking at specifically one side of it. Covered calls, you're going to be giving up your shares, and covered puts would be you have the cash to buy if you get hit. So you're basically talking at like 1/2 of the wheel strategy. Selling premium is far more risk. No, it isn't. Not at all. I don't know who the fuck taught you that, but whoever taught you selling premium is far more risk, they taught you wrong. I don't know wherever you heard that. When you sell premium, you can easily cap your risk by just using credit spreads. Or it could be defined whether you have the underlying shares for a covered call. You could have sell covered puts if you have the underlying cash. I don't know whoever taught you that, but they are comically wrong, and you should really reconsider if you should be listening to that person. That is absurdly silly. Selling premium is far more risk. To say that as a generic blanket statement, you're just factually wrong. Like, you really strongly need to reconsider who taught you that one. Like, strongly reconsider. I said naked. So most people aren't going to do naked because you have to have level 4 from the brokerage, and most people don't have level 4 clearance. Naked can be, that would be the most dangerous. Selling naked calls is probably by definition the most dangerous form to engage in the market. I'm trying to think, because like, if you buy premium, technically you have the bottom. If you're selling puts, it can only go to 0. It doesn't happen, but technically you have unlimited upside risk in selling naked calls. That's a theoretical thing. Like, it does happen to some people. It doesn't happen often at all. But theoretically, a stock could go to infinity. Like there's no cap on how high a stock could go, which means if you're selling naked calls, there is theoretically unlimited risk to the upside. But once again, I would never, ever, ever recommend anyone engage in naked call selling or naked put selling. Most people can't because you're not going to get level 4 clearance. A lot of the times to even get level 4 clearance, on top of that, you would have to have a lot of capital at that brokerage, because if you get blown out, the brokerage is like they have to take on your risk. So you have to have a big account. You're probably going to get margin called. There's ideally things that would like stop you from theoretically completely blowing up. But I would never, ever recommend, unless like you would have to have an extremely compelling reason of why you would possibly do that. But for 99.999999999% of cases, you should never be selling naked premium, whether calls or puts. Just don't do it. And also, 95% of people aren't even going to be, 98% of people aren't going to even be in the situation to be able to do something like that. So it's just don't. Stay away from it. I sold calls when I was naked on the computer. Does that count? You were on your computer naked? Now I just have a lot more questions than I do anything else. AMC naked calls, wouldn't even do that. Well, first of all, there's probably no point in touching AMC. 5-minute is breaking down. 10-minute is breaking down. 30-minute is still holding bullish. 5-minute breaking down. 10-minute breaking down. I find this concerning over here. The NASDAQ right here, 30-minute. Granted, it doesn't close for another 13 minutes, but pay attention to this bar, because not only are we taking out the recent lows, we're kind of at some important pre-market lows. We're getting to somewhat of a dangerous territory here, just below 19,400 on the NQ contract. So pay attention to that. Before I let you guys go, here's a look at the options flow. SPY just hit a fresh delta low of the day. Then MAG 7 hit a fresh delta low of the day. So remember before, when the SPY was picking up and it was the question of who's going to win out, the SPY or the Qs, the SPY or the NASDAQ? Well, it looks like the NASDAQ is, as of now, officially winning out. So just be careful, because not only are we at a fresh price low of the day, we are at a fresh options low of the day. So of course things can recover. Of course things can turn around. But we're just not seeing any measurable aspects of that at this moment in time. Not at this moment. So on that note, please protect yourself. If you do have a bullish position, you have to respect your risk. Like, what are you doing? Because like there is just, as I've said a gazillion times on this show alone, it only takes that one beat that keeps trending against you to lose all that you've already worked for. So if it's going wrong, and we all know it, we all 100% know when you're in that situation, you're like, dude, I know I should be out. Just honor it. Like, just this game is like, just survive to fight another day. That is like very much the name of the game. So I beg of you to definitely just like, we all have that gut feeling. We're like, shit, it's going wrong. Just cut it. You're going to feel way better. And if anything, it's going to allow you to see the market in more of a lucid manner, to see if there actually is additional opportunity, rather than like kind of holding on to that like hot burning coal that you're just like praying more than anything else. So, and then if you're bearish, if for some reason, if you had a bearish thesis on today and you're riding it, obviously, first of all, congrats to you. Ride it as long as the trend persists. I have a potential bounce point at 5,500. That might be something interesting for you guys to watch on SPX. We're getting close to it. That would be about 9 more points, so about another $1 sell off on the SPY. Maybe it breaks down. Maybe that's support. But once again, whatever direction you're on, you have your risk, you have your reward, but more important than your reward is just respect your risk. When things turn, and like I said, dude, we all have that feeling when you're in that bad trade and you're like, dude, I know I should get out. Like, you just got to get yourself to actually get out. You got to, because as much as there is that, yes, 0% chance that it comes back and you're magically fine, it just takes one bad hit and then you are donezo. So definitely not only think about that today, but for really every other trading day of your trading career. That's what I have for you. If you haven't already, sign up for Public. It's free to sign up, free to download, no commission fees, no per contract fees, and you get a rebate to trade options. Use that link pinned to the top of chat, because you're going to start off at a higher rebate tier. Highly recommend you guys check that out. Later on today, after the market closes, I'll be posting an update video of everything that happened in the market today, and then we're going to be streaming once again tomorrow morning, 9 a.m. bright and early. Be careful during the lunchtime chop here, and I ideally, just look for those high quality setups. You are very much just like look to take advantage of those beautiful high quality setups. That's what I have for you. Best of luck. Crush it. Peace.